Hello, everyone. Thank you for joining us. This is Sherry, and I really appreciate you being here. Before we get started, we did the sound check. Everybody told me that they could hear me. And again, on my screen, you're going to see our lineup is Nick Lovelace, Melissa Armo, Rick Sadler, and Dan Passarelli. We're sending condolences to Nick. Death in the family is going to prevent him from being with us. So Melissa has offered to step up and take the first time slot. Today we're going to be talking about how you can escape the rat race and start profiting, combining volume and price action to understand market behavior, building a trade management plan to reduce risk and optimize profits, and I'll have a mystery guest in our third time slot. So please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. And this is also where you're going to find today's recording. And before we get started, of course, I have to share our disclaimer. Please consider carefully whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results, and I'd like to ask that you please take notes and write your questions down with a little bit of context. Most of our speakers like their questions at the end of their presentation. I believe Melissa likes to have them on the fly, and she likes your interaction. So I want to introduce to you Melissa Armo of the Stock Swoosh, and she's going to be talking to us about earn an extra $1,000 a day trading in this inflated economy. Initially, Melissa was a mortgage banker, and she changed industries to pursue a security trading career in 2008. In 2012, Melissa founded the Stock Swoosh LLC, and it's an educational firm that empowers traders with a complete and detailed system to become profitable traders. She's a self-taught day trader with over 10 years of experience. Oh, well, there we go. It looks like today's going to be one of those days. Oh my goodness. Well. So just a second from this slide. There we go. Just wanted you to see who we're talking about. The Stock Swoosh is an educational firm that empowers traders with a complete and detailed system to become profitable traders. She's a self-taught day trader with over 10 years of experience. Melissa's specialty is a trading strategy that focuses on shorting stocks that gap. Melissa also appears frequently on TV as a stock market expert. Watch her on RT America, Cheddar TV, CBS, Fox News, and Fox Business Network. And welcome, Melissa. Thanks, everybody, for bearing with me on that. Let me just bring her in as the presenter. And can you hear me, Melissa? Can I hear you?
Good morning. Can everybody hear me and see the
There
slide?
you go. There you go. I can see your slide, yes.
Pat, okay.
Your mic might be just a little bit low. What does everybody say? Do we have good sound there?
Can you hear me?
I can hear you.
Let me move the mic closer to me.
There you go. Now I can hear you really well. Okay, great. Take it away and I'll be quiet.
Good morning, or good afternoon, I should say. I don't even realize it's 1 o'clock. The day is flying by. Welcome, everyone. Thanks for coming today. Thanks for that nice introduction, Sherry. Beautiful fall day here in Manhattan. I live in New York City, and as Sherry said, I own the Stock Swoosh, and I trade, and I've been trading now for, gosh, almost 13 years. But I did not know how to trade when I started out, and pretty much no one starts and decides to trade and makes money the first day out of the gate. I find that people go through a process either of taking multiple classes that may or may not work until they find and actually meet someone that can teach them something that works, or they teach themselves how to trade, which was the process that I did. And that is really the most difficult process. Because when I started out and I taught myself how to trade, it took about 3 years for me to figure out my system. And, when you're doing that on your own, and I was trading my own live money, you don't know when or how long it is going to take you to figure it out. So I definitely think it's easier if you learn from someone else and have a good mentor, although that may not be the first person out of the gate. And again, as I said, it's usually a process where until you find the right person really that you click with and that you connect with, or that you even say, wait a minute, I think this system, this strategy sounds like something that might work for me. And as Sherry said, I do talk on all major news channels, and we've been talking all the time about what inflation, everybody's, non-favorite topic, I should say. And I think we're going to continue to talk about this into the end of 2021 and of course into 2022. So today I thought we'd discuss how you can earn an extra $1,000 a day trading in this inflated economy. And I'm using $1,000 as a barometer. You could earn an extra $500 a day. You could earn an extra $2,000 a day. It depends on your risk. So I'm looking for a one-to-one risk. If you're willing to risk $500, then you are looking to make a reward of one amount. So you would be looking for a profit of $500. And again, I do active day trades, but I also do options, and we're going to talk about that a little bit today as well. Markets rallying today, very, very strong. Big earnings out tonight, which is Tesla. I will be gone before that reports, but it's after the bell if you want to watch that. And that will definitely affect the market. So we're strong today. We're bullish today in the market and in all the major indices. Where we go tomorrow morning, though, will depend on, again, more economic data, which is the unemployment numbers that come out, the claims every Thursday morning, and then Tesla tonight. So we're in a good period here where we're getting active, big moves, volatile moves, earnings moves. So it is a good time to trade. So the very idea of being able to earn $1,000 a day is not unrealistic. It's just that many, many people who trade do not know what to do. So that's what we're going to talk about today. This is me for those of you that don't know me. And again, you can always email me questions at melissa@thestockswoosh.com or call me at 929-3200-GAP or follow me on Twitter, Facebook, YouTube, or Skype if you have questions as well. And you can watch me on TV. Tomorrow I'm on Real America's Voice at noon, and you can see me pretty much on every channel. I try to tweet when I'm going to be on at the time that I'm going to be on TV. So let's talk about what's inflation. And this may seem very basic, but let's talk about it anyways. It's always good to break it down step by step. So inflation is the rate of increase in prices over a given period of time, which we've seen. We've seen since the beginning of 2021, and actually we've seen even from 2020 into 2021. Like if you go back a year ago, what you were paying for gas was way different 12 months before this. Inflation is typically a broad measure, such as the overall increase in prices or the increase in the cost of living in a country. Again, I live in New York. I live in New York City. Prices have increased here. They've increased everywhere in the United States. And I know some of you may be in other countries. I'm not sure what's going on everywhere around the globe, but we've definitely seen a high cost of things and costs going up in the United States. So the current state of things in this period of inflation is that it's not temporary. We're already past the temporary mark. I remember the beginning of this year, the Fed chair, Jay Powell, he said, oh, I think inflation's temporary. I knew that was a crock. I didn't think it was going to be temporary. No one even knows even now how long it's going to last. So we're already past that point, okay? What does it mean? It means the gas prices are up, food prices are up, and we're getting into a cold winter. For those of you that follow the Farmer's Almanac, they're predicting, and I've read many articles about this, even locally here in New York City, they're predicting a serious cold winter, snow, lots of snow dumped in the Northeast. Again, depending where you live, which will mean higher cost of heating for the Northeast. And again, prices are up. I always order my food now since COVID directly online. I haven't been to grocery stores for probably about 18 months. And I stick items in a cart and I order them through Amazon, through Whole Foods. Every time I go in, this is up, this is up, this is up, this is up. Sometimes I just put in things I need and I don't do the order till the end of the week. Every time. And people say, oh, it's 1%, it's 2%, it's 5%. I'm telling you, I've seen 30% increase in some of the foods that I've been ordering. I just buy it, I want it, I buy it. But it's really, really been in a period where you're like, wow, why can't we get things? Why are the shelves bare? Why are is stuff going up? I mean, it's not like we don't The farmers aren't farming. I mean, what's going on? Many people are worried about this across the board, and they don't know what to do. And again, like I said, go back a year ago, 2020, you can tell that the costs are going up. So what can you do as a person? If you live in the United States, you're not going to go without food. You're not going to stop driving. You can't stop inflation. It's out of your control. Housing has gone up, okay? What can you do? Well, how do you beat inflation? Number one, you could spend less. Personally, that doesn't work for me. I don't like to do without. That's one of the reasons I work very hard. And I like to trade, because when you trade, you have unlimited income. Oh, the only difference in what I make is how much share quantity, size I take in a trade. So I don't like to spend less, but you could spend less if you want to. That would be a solution. Two, you can ask for a raise at your job with your current employer. You might get it. We're in a period right now where a lot of people need employees, and they might give you a raise to keep you. If you're valued, if you're important, that might be the case. You could ask. But you know what? Your employer may not be able to afford to give you a raise, because it's costing employers more for things too. Three, you could get a second job to earn more money and work more hours per week on top of your full-time job. Again, if you're working 40 hours a week or more than 40 hours a week, are you going to have time to take on another job where you're working 15, 20 hours a week? That's a lot, especially if you have kids and a family, and we're going into the holidays. I mean, we don't want to work 60 hours a week around the holiday season. Halloween is in 10 days. You want to enjoy life, have fun. It's beautiful weather right now here. Again, like I said, in New York, it's the fall. You don't want to be working 24/7. That is also the nice thing about trading. I trade the stock market. I'm usually done in the morning quick, but the market closes at 4 o'clock. Even if I wanted to trade for the 6.5 hours the market is open, that's only 6.5 hours. I'm not even working 8 hours a day, quite frankly, but I tend to only trade the morning. But you could get a second job. That's an idea if you want to do it. Or what's another choice? You can earn money trading the stock market, and that's what we're going to talk about today. You do not have to trade full time. If you love your job, or you like your job, or you don't know how to trade yet, work full time, do your job, and trade on the side. You can trade options on the side. You can do day trades on the side. You can do this to earn extra money rather than doing the other things, like I said, which you are going to spend less. Because at the end of the day, it's out of your control what's happening. The economy is out of your control. They're talking about the stimulus plan. They're swearing up and down the taxes aren't going to go up for middle, low income earners. I do not believe that at all. I think they're going to go up for high earners and everybody across the board for the cost of this 3.5 trillion stimulus plan. Now they're talking about 2 trillion. Either way, it's a crap load of money that they're going to be spending. You cannot control some of these things. So you have to take it upon yourself to earn more money, and there's ways that you can do it. While you might have to learn what to do, why there might be a cost investment when you initially start to trade, because you're going to have to learn, take a class, open up a trading account, deposit money into that to train with. The fact is, long term or even short term, like 3 months out, this is a better way for you to move ahead rather than taking on an extra job or just doing without things. And again, nobody wants to do without, nobody wants to spend less, and you certainly don't want to do that over the holidays, okay? And I can see questions here as we go along. I think, hold on, let me plop this down. I just opened up the thing. I can see questions as we go along. If you have any, I just opened it up. Thank you. Okay, so getting back to what I was saying, you can work for yourself. You can do that if you want to. And that means what? You could learn how to trade. So you have to get clear with your financial goals. And really, sometimes it's much as just sitting down with a notepad and a pen and paper and saying, where do I want to be in 6 months from now? Where do I want to be by January 1st, 2022? Where do I want to be in 1 year from now? I mean, it's just as simple as that. But you got to face reality sometimes of what's going on to be successful. I mean, if you could speed up the time and achieve your goals for making money faster by learning how to trade or learning a new trading system, if you're trading now and you're failing or losing or not making enough, why not do it? Why not do it? Again, why not invest the time? Why not invest the money? Why not? Because you think you're like, oh my gosh, 2022 seems so far away. It's really not. It's really not when you think about it. I mean, this year has just flown by. And you've got to be honest with yourself. What do you want to achieve and by when? Have a plan of action, set it up. And again, I'm very much like a person where I write things down. I write goals down. I write things I have to do in a day. I have sticky notes. I think it's good to have a pen and paper and write stuff down. It helps you be accountable to yourself with what you're doing. But the nice thing about trading is it's something you could do with a short time a day. And again, time is money. So, if you can make the same amount of money in a half an hour that you can make working 40 hours a week, I mean, what would you rather do? I always say I'd rather be in and out of trade in 5 minutes. Now, why sometimes it doesn't work out like that, and I'm in a trade longer than 5 minutes, I love the fast trades where I'm in and out very, very quickly. But even if you're a newbie to the market, even if you're a baby as far as the market goes, you've never traded before in your life, you don't even know what you're doing, the fact is you can learn. I've taught beginners, I've taught people that are doing this forever. They don't know what I know specifically about my strategy, and so they're not new to the market, but they're new to what I do. But if you're new to the markets too, you still can learn. And quite frankly, anyone can learn. And it doesn't take you that long to learn. Really, if you open up your mind to do it, and you're willing to do the work, and you're willing to listen and pay attention and absorb the information, you can learn. Trading is not rocket scientists. The reason that many people lose is they don't have a good strategy. And on top of that, they have terrible money management because a lot of people just gamble. They just want to throw a lot of money into the market or a little bit of money into the market and make a lot, and they really don't have a lot of thought process to that. And you saw that really at the beginning of the year with the Reddit explosion, where people were doing all these Reddit stocks in the chat rooms, and they were just taking pot shot ideas and stocks. Sometimes they worked, more times they didn't. And people didn't really have a thought out strategy to it. Trading is not gambling. When I get up in the morning, I look at what I'm doing and I process everything and prepare and plan before the open, okay? And again, any questions, feel free to ask me as we go along here. So you have to earn more money if you want to beat inflation. And in fact, you have to move your income ahead of the inflation number. So you have to actually earn more this year than you earned last year to get ahead, to stay even, and then to get ahead. So over year, you've got to actually earn more, not the same and not less. Because if you're not earning more, you're not even at the same point when things cost more. And ideally, you want to even earn more than that, okay? Because year over year, like if this was your, look at my arrow here, you want to be earning more money. Whether you're trading, whether you're at your job and you're getting raises, whatever, you want your income to go up, okay? Ideally, everyone wants that. So you can find a way to do this. And how do you do it? How can you make money in the stock market? I call it chunking it out. You're active. You're in and you're out. You're in and you're out. You're actively trading by pulling money out of the market on a regular basis. So what is it you need to be successful? Number one, you need a consistent strategy that works in any market condition, whether it's bullish, whether it's bearish, whatever. Number two, you need a way to make the daily picks. What are you going to trade today? Why? How many picks do you have? What direction are you going to take those trades? Three, you need a way to enter and exit the trades. You need entries, you need targets. And then four, you need good money management, which sounds very basic, but like I said earlier, a lot of people don't have good money management. If you have $5,000 in a trading account, you can't risk $5,000 in a trade. You can't risk $2,500 in a trade. Theoretically, yes, you have it, but you cannot risk 50% of your account or 100% of your account in one trade. You have to take the cash you have and look at it. And again, I said earlier, 1-to-1. 1-to-1 is good money management, okay? So when I'm looking at doing this, I first look at the strategy. Now, what strategy do I use? I trade gaps. So let's look at what is a gap. I'm showing you a gap right here. This was Zillow. We did this the other day. Actually, it was just Monday, the 18th. So what is a gap? A gap is the difference between the close and the open. So this is a daily chart of Zillow here. Stock closed here the night before, gapped down. So a gap is the difference between the close and the open. It closed here one price and opened at a different price. It closed here, this was Friday night, around 95 and change or whatever, and opened down here around 87 something in the morning. This is Monday. We shorted it. So a gap is the difference between the close and the open. In this case here, this was a gap down, and we shorted it. We made money. Now, what is a gap up? Closed here, gapped up. When it closes at one price and opens at a higher price the next day, which is what this did. We did not do this, but I'm showing here this is a bullish gap, and it rallied, and you could have bought it. So this is a bullish gap. This is a bearish gap. Chart's the same. It's Zillow. okay? So this thing here that we did on Monday, down here's the volume, was a short, okay? But the strategy is gaps. That's what I'm doing right there. Now, many people do not understand how to correctly trade gaps. They think stocks do gap fills. They do not consistently work to do gap fills as a strategy, but you can't short every gap down, you can't go long every gap up. So I determined a way to qualify them. And that's what I do for my system, and that's what I teach people. But you have to have a strategy no matter what you do every single solitary day if you're trading, if you want to make money. And two, you need a way to make the daily picks. So for me, I go through a checklist. Boom, boom, boom. I have a checklist in the morning, just like if you were a pilot. You get in the plane, you're a pilot, you go through a checklist before you take off. Every person that's an expert, if you were a doctor or a nurse and you were going to operate on someone, there's a checklist, a procedure you go through before the patient comes in, before you do the operation, okay? It's everything that I do in the pre-market in the morning where I'm getting ready to figure out what I'm going to do and how I'm making the picks. Otherwise, you just be waiting aimlessly after the open and then going willy-nilly depending on what you want to pick, what you want to trade, whether you want to go long or short. And then you're all over the place, okay? You're not organized. So you got to figure this out ahead of time. Number three, you need a method and structure to enter and exit the picks, because entering and exiting is important. And like I said, why? Because you have to chunk it out. This is not long-term investing what I do. This is active trading. You're looking to pull out $1,000 a day, $500 a trade, this trade, that trade. You're pulling money out, you're booking it. This is not, you're gonna buy a stock and you're gonna hold it for 2-3 months. That's long-term investing, okay? So you have to get in the mindset that you're in, out, in, out. If you short a stock at $10 and it drops to $9 and you have 5,000 shares, what would you make? $5,000. And if that happens in 5 minutes, you'd make $5,000 in 5 minutes. Does that happen? Yes. It's the idea of getting momentum and volume and a move within a short period of time, and you're getting it and getting out. If that short period of time could be a couple of minutes, it could be a couple of hours, but it's the idea of being in and out quickly, okay? So like I was saying, gaps are a specialized strategy. If you want to make money in the market, you need to think and act like a true professional. Just like I said, if you're a pilot, and it doesn't matter if you're doing this full-time or part-time, you still have to think like that. And it doesn't matter if you're risking a small amount of money or a large amount of money, you still have to think like that. You have to take this seriously with what you do. And part of that, like I said, is the prep work. It really helps me. The more time I spend prepping in the morning, getting ready to trade in the pre-market, the more money I'm probably gonna make and the better I do in the day, and the faster I'm usually done, because I have everything figured out ahead of time. And that really helps me get my mind clear with what I'm doing. All professionals have specialized strategy, systems, and reasons for taking trades. If you do not know the reason that you're taking the trade, you probably shouldn't be doing it. Again, trading is not gambling, and you have to take that seriously. Again, let's go over the basics here, the nuts and bolts. What is a gap? A gap is a break in continuity, interruption, a hiatus, a divergence, a difference, a disparity. What is a gap? It's a break in price. It's a price break. So I'm looking at charts. Could be the daily chart, could be the 1-minute chart. I'm doing advanced technical analysis where I am looking at a chart and I'm predicting the direction of the stock, where it's going to go after a gaps. Like I said, Tesla's out tonight. You can watch 4 o'clock. I will be watching live. Tesla will report at 4 o'clock and it will move. I do not know where it's going to move. It could go up, it could go down, but it's for sure going to move. After it moves and after it gaps tonight in the post-market and then the pre-market tomorrow morning, I'll look at it. I will rate the gap using my system to determine if I'm going to go long or short Tesla. I don't know. I might not do anything with it, but I might. But I don't predict where the earnings are going to take it. I predict where it's going to go after I see the movement, after I see the gap. Does this make sense? And so that helps you still get clear before you're doing it. Now, what am I talking about? The pre and the post market. Here's the chart. This is a 15-minute chart of the QQQs. So this was back 12th and 13th. Okay, this was last week. So the market fell. Boom. Down in here, you see this. This was the 12th. So we fell in the post market at night. See it? Then we gapped up in the pre-market in the morning. again the next day. So this was, 4:30 in the morning, and this was at night. So we were like at 355, 75-ish, and we opened like $2 higher early morning the next day. So this was a gap up. So you're seeing the gap here live. This was gapping down at night, and in the morning it was gapping up. Okay. So you can look at it that way too. All right. Again, this is a 15-minute. So this was in that day, the 12th. So on the 12th here, we were selling off down in here. And then we ended up opening up here the following day on the 13th. So trades go off after 4 o'clock. I don't trade that period. I don't trade in the morning before 9:30 either, but people do. Big institutional money trades the pre and post market. Some retail traders as well. Again, I do not, but you get volume and movement, and that is what I'm watching. Again, you're going to see that in the Tesla tonight. Now we're going to go over here 1 week of results. This was 2 weeks ago. All the trades we did for the day trades, 1 week of gaps. We're going to go over them. If you have any questions, you can ask me just to see what kind of results you could have if you want to make this kind of money in a week. Now, again, $1,000 a day is an average, but you would have to risk $1,000 minimum to make that much. There might be some days you don't trade. You can risk less than that. You can open up a trading account at a retail broker with as much as $25,000 or more to get margin. You can open up a prop account at a prop broker with as little as $2,500. You will get about 10-to-1 margin. So again, your risk has to be similar to your cash size when you're taking trades. And again, any questions on that, you can ask me now too or email me. So 9/27 feels like a long time ago. We shorted the market. We shorted the QQQs. Here's the day. Closed here, gap down. This was on the 27th of September. The market fell. We shorted it. We shorted it here. We made money. Okay. So we entered the Qs at 369.80, 1,800 shares, and it's an advanced risk of 2,700. Again, you can take 100 shares. Either way, you see the move here. We exited at 368.28. Profit was $2,736. So this was a really nice move, more than a buck, about $1.60-ish. Here's the 1 minute. So here's the gap. Okay, this is the daily. That's where we did it. Here's the 1 minute. Closed here, gap down, rallied, boom. We shorted it, got the drop, boom. So again, you could have done this trade. Time of the day here was down into 9:45. You would have been done trading in less than 15 minutes. And again, you could have taken 100 shares or 200 shares or 500 shares. Now you might say, well, this is a little pricey to short the Qs. You could have bought a call. You could have bought a put. A put is a short. So this is a equity short on margin, but you could have bought 1 put or 2 puts or whatever you wanted to do and gotten this trade and got in and got out. That would have been cheaper, and you don't need margin to do an option. Okay, a put is a short and a call is a long. And again, any questions, let me know. But, really you can do this with a smaller size. Either way, this is what I call the money move. This is what? This is selling. So the stock, or in this case here, the QQQs, which is the market ETF, collapsed. And we got it quickly. That's the whole idea. Now then we did Apple the next day. Closed here, gap down. This is the 28th. Apple we lost in. I'm going to show you what happened here. I did not go back into this, but this did end up going and selling off on the day. I shorted this though in the morning, got stopped. I did not retake it. So this was a loss. Entry was 143.30. 2,000 shares, risk 2,600. I got stopped out. So I use limit order stops when I trade. I think stops are important because it's like the insurance. It protects you, that the trade doesn't run too far against you. But I'm going to show you here that this did end up going again. If I had retaken it, I would have made money. So I got in here, cut the drop, didn't get out. It was up only a little bit, booped over the high. I got stopped. If I had gone back into this Apple, I would have gotten the drop. Here's where it went. Again, 10 o'clock, dropped here into lunch, into the 1 o'clock period. This is a 1-minute chart as well, but I did get stopped in this and I did not retake it. It was here. That was the 28th. Okay. So again, trading is not something that's 100% of anything. Your idea of finding a good system is to find something that you have a high win ratio system, that you have more winners than losers. If you have more winners than losers, you will make money. And again, I purposely use stops so that they protect me so that my losers don't run away from me. Sometimes I do retakes, I did not in this. However, I did another trade on that same day. Instead of retaking Apple, I did the Qs again. The second day down, which was the 28th, the Qs gapped down again. So this was the day we first did it. Then it gapped down again, then it rallied, then it broke. This had a huge move. Again, this is on the 28th. So I got stopped in Apple, then I did the Qs. So anyways, entry in the Qs was 365.60, 3,000 shares. That's a good size. Again, you could have bought a put. Cheaper or less size if you want to. Risk was 2,700. We did an add. I added to this trade. I took more of it because it was really, really good. 363.60, total share 6,000, average price 364.60. Boom, got the drop. Basically almost $5, huge move. So again, if you had taken 1,000 shares, you would have had a huge move. I mean, it was a really, really, really nice trade. Anyways, here's the move over here. So you see this here. We got in, dropped, did the add, got the drop. This is small, but I wanted to show you the 1 minute. So again, 928, stock closed here, gap down. So it closed here on the 27th, gap down here on the 28th. We shorted it, got the drop. Again, you could have bought a put in this. You could have like bought the 365 puts if you wanted to do a cheaper version of this, or you could have taken 100 shares and then added and had 200 shares. Either way, it was a huge, huge move. So again, this is the daily. This is a gap. Down here's the volume. And this is the same day I did the Apple. So I got stopped in the Apple, and then I did the Qs, but I still made money in the day, and I didn't even get back into the Apple, but I could have. Okay. So again, consistency, boom, boom, boom. Now on the 29th, we didn't do any trades at all. No trades on the 29th. There wasn't anything that met my criteria. That doesn't happen that often, but it can happen. And so I'm pointing to that in here so you know. Now this was before the busy season. Last week started the busy time where earnings season starts in the fall. So we're pretty much trading every day now. But this was 2 weeks ago, and we didn't do any trades on the 29th. Then on the 30th, we did KSS. Sure, you've heard of KSS, a retailer. Let's look at what happened on this guy. Stock closed here, gap down. Again, closed here the day before, gap down here the next day, fell, boom. We shorted it. Actually, this had a nice continuation if you had wanted to do this for a swing trade. Again, this was September 30th, so we did it. This was an equity trade. Entry was 48.15. 4,000 shares, risk was 2,600, exit 47.39, boom. Profit 3,040. Again, closed here, gap down. We got in it, shorted it, got the drop. And this was a nice move. And to be honest with you, I didn't even get this whole shebang. This kept going. I had an early exit on this because I like to be in and out in the morning quick, like I said. This continued down all the way down into here the whole day if you wanted to, or most of the morning actually, if you wanted to hold it. So again, you see you're getting in, you're getting out. A buck is a move. 90 cents is a move. This was almost a buck. It has to do with the share size and the quantity, but you've got to get the precision of finding the best pick and then getting the right entry, especially if you're going to take several thousand shares of something, okay? So this was KSS on the 30th. And, again, I'm very focused. I tend to only want to do one thing at a time. Sometimes I will do two, like I got stopped in the Apple and I did the QQQs, but I will prefer to do just one stock pick and one trade per day. Again, then adding size to it. And I think that helps you stay focused. And it's just about that fine tuning it. Then on 10/1, no trades. No trades again on 10/1. Again, this was before earnings season. So in the week of this week here, that was the week of the 27th, there were 4 trades, 1 loser, 3 winners. Average win ratio was 75%. So if you come and you want to trade with me, you figure of every 10 trades, 7.5 are going to win, 2.5 are going to lose. So that's why, again, use stops. Total profits was 32,276 with an average risk of 2,700 for these trades. Divided by half, if you wanted to risk an average of 1,300, or by 30%, if you wanted to risk slightly less than 1,000. Terrific week. And really, again, it's the win ratio. Win ratio high. Quality trades, good picks. I'm doing open house this week if anyone's interested. If you want to be in the trading room Thursday and Friday, you can email me at melissa@thestockswoosh.com for entry. I do not know what we're going to do tomorrow. Like I said, I never know what we're going to do until I get up in the morning and I go through my process in the pre-market. But you're welcome to a trial if you want to email me and come to observe Thursday and Friday this week. It's the idea of fine-tuning what you're doing to make money. Now, let's go to part 3. How can you find these trades? You scan, you use a system, and you follow it. And anything that you do when you're trading, it's never just one thing. One thing is not enough. You say, well, it's on the 20-period moving average, I'm going to buy it, I'm going to go long, or the market's up, I'm going to buy this, or the trend is up, I'm going to go long. You can't, it's not that simple. It's a combination of thing after thing after thing. It's like putting a puzzle together. You got to put the whole puzzle together before you see what it looks like, unless you cheat and look in the box. It's the idea of a layering to get everything right. It's never just one thing. If you want to be successful and make money, you have to have a whole thing together, which is what a system is, in order to get organized to do it. Okay. Any questions here so far? Let me look over here. Not so far, okay. Anyways, the philosophy behind what I do with gaps is what? I'm looking to analyze a large time frame to make the trend decision on the directional bias for the gap, okay? All large traders of every kind look at large time frames to make decisions, particularly institutional traders, which is what I'm looking at. I'm looking to see what is institutional money doing in the stock. Are they buying it or are they selling it? And then I know what to do. I'm looking also to see what they're doing on a daily chart. And then I'm honing my entry and exits down any 1-minute chart or a smaller time frame for accuracy. Because again, if I'm actively day trading, which I am quickly, I've got to hone it down for the focus and accuracy. Using the daily chart to make the decision for the stock pick allows for accuracy in the direction, and using the 1-minute chart allows for good risk to reward trades with accuracy. And that's what you want. Because ultimately, if you started out and you were very accurate, again, a 75% win ratio, you can see how you can make a lot of money if you risk more, if you have that type of accuracy. How are you going to get to that point? You have to learn it, you have to do it, and prove to yourself that you can constantly keep hitting the winners that much. That's what it's about. It's not about just holding everything to the piggy target and having some big home run. So many people want to take one big trade and make all the losses back from everything that they've ever traded before in their lifetime, all the losses they've had over umpteen years trading and not being able to figure it out. That's not realistic. Again, start from today and look at today as a fresh start. And if you come to me and you want to learn from me and you want me to mentor you, start fresh. Don't look back. I say have amnesia about the bad things that happened in the past. And to be honest with you, I think we need to have amnesia a little bit about what's happened in the country with COVID, because everybody is so out in what's happening so much with us COVID. People are getting so negative anymore. We have to move forward. We have to move forward with our lives. So let's talk more about the strategy. Many stocks on any given day have no strategy to trade as a day trade. That's why on most days stocks do not have a proper entry. There's just no strategy, okay? So you've got to have a strategy. That's very important. What is a strategy? It is a foundation. It's a foundation to trade. You need an infrastructure for every entry, and that's the strategy. The strategy is a core reason behind why you're even watching that stock in the first place, or even contemplating an entry or trade in it. An entry in a stock should not be taken unless the trade has a foundation for supporting it. It's like It's like if you were going to build a house. First of all, I wouldn't want to live in a house that looked like that, made of sticks in the water. But I mean, actually, you know what? Remember that terrible story that happened over the summer with the condo in Florida? Oh gosh, that was a foundation issue. I'm working with real estate agents here in New York because I've been shopping for apartments. They also sell in Miami. Huge foundation issues there. Low elevation and not a good foundation. That condo that collapsed where they had those people that died. Remember that? That was June, July, or I don't remember when that was now. It's a couple months ago. It was collapsing. Years and years and years ago, they did not have the same foundational structures where they build them on stilts down there, and then they have the concrete, and they have the concrete on these stilts. They didn't do that back then. So again, the foundation for a house is just as important as the foundation that you need for a trade. And if you don't have any foundation, do not expect yourself to be profitable. It's a crapshoot. It's a 50-50. It's like going to the casino gambling. And that's a problem. That's a problem. Okay. Sherry, I'm seeing your message. I can keep talking as long as you'll let me talk. Yeah. Just let me know when to be done. So let's get back to the foundation here. So gaps are a strategy or a foundation for your trades in the market. When you choose to take a trade, there has to be a support system behind why you're taking the trade. Gaps are the support system, and they're the reason why you would enter a position. Okay? The reason you're choosing to enter a stock or the foundation for your entry should be because the stock has a quality gap. Like, that's how I look at it. That's how I personally look at it. And if it doesn't meet the criteria, I don't do any trades that day. Like I showed you, that one particular week was slow. We didn't do anything 2 days out of that week. Now that's unusual, but that was, it didn't meet the criteria. This is not like, you go to your job and you get paid no matter what, even if you show up. Sometimes you go to work and you're sick. No. You train and you're sick and you're not focused and you shouldn't be trading, you're going to lose. So you're better off zipping it, not trading, okay? Anyways, let's go over the basics of a gap. Again, a stock gaps from the opening price today is different from the closing price of the previous day's trading. A gap is a break in the price action from one day to the next. Simple. Let's go over another chart here. This is Facebook. A lot of gaps in this guy. Let's go over it. So back in September, and we had a lot of shorts in this here. So anyways, here's this. Closed here, gap down, fell. 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 So we have a series of gaps here in Facebook. We did do options in this, we did do puts, and we did day trade shorts too. Okay. So why are gaps so profitable? They're created with large institutional money. That's what makes the gap. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. By having a formula to rate and qualify the gap, you get confirmation, and then you get conviction that the large institutional money is on your side and you play it. Gaps are an event and a sense of urgency. That's an action is being forced by participants at the stop. This is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power money, okay? I'm seeing a message here from Sherry. I have 5 more minutes. So let me skip ahead here. And again, if anyone has any questions, ask me now. I mentioned earlier that I also do options. I have an options newsletter. This was an Adobe trade that we did the 620 puts. These were a little pricey, okay, but it worked. We did puts in this. I just want to show you, here was the sell-off. We got in these on the 22nd. It fell off a cliff, okay? Beautiful move in Adobe. I haven't looked at that for a while. We'll have to look when the earnings are coming up. The general thing I'm talking about here today was about earning $1,000 and how in order to beat inflation, you have to move ahead of inflation, making more money and earning more money. And it's the idea that you can trade, but you need a plan of action to trade and you need a system. And I think that it's important for people to have this, whether they're trading full-time or part-time. You can trade actively and learn at the same time. I'm teaching people and mentoring them. Again, just because you've taken classes in the past does not mean that you're never going to learn how to do it. It's about finding the right strategy and finding the right mentor and finding the right fit. So my system is called the Golden Gap. I teach a 26-point checklist. I think it's very important for people to take charge of their finances and their own life. While you could give your money to somebody else to trade, you're going to have a better understanding of what you're doing and feel more self-empowered if you take it upon yourself. Plus, trading is fun. The idea of making several $1,000s in a few minutes a day is really, really exciting, quite frankly. And if you've got the time to do it, or you're working from home right now because of what's happening in the economy, and you can work from home and trade, and you could do it part-time, then it's a great time to learn. It's a great time to do it. But you don't have to trade alone. Again, I'm calling the trades live in the room. I'm doing an open house this week. If you're interested, you can email me to come to the open house. But my class is called the Golden Gap System. It's a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. It's a rating system. You will learn the entries, the exits, and again, it's a full 2-day class where you're going to learn all the information that I do, how I make the picks. Will you know everything after the class? You will, but will you retain everything? Well, you're going to have to ask me questions. So, you know, that's the whole idea of being part of the group, being in the live trading room. After the class, you can ask me questions on a daily basis. Okay. So again, the class is a full 2-day course. Class is online, and the class is this weekend. It's October 23rd and 24th, 9 to 5. Class is online. Class tuition is $6,999. If you want to sign up, you have to email me for the forms. It is not on the website. I'm running a special through Friday, which is actually in 2 days, but it's a good offer for this webinar. If you sign up for the class for this weekend, you get the options newsletter and the trading room free through Memorial Day of 2022. So you get all my trade picks for the options newsletter and the trading room free for almost 7.5 months. So any questions here? Sorry, I kind of feel
I
like
have one for you, Melissa. I want to know, we are going to be posting a recording of this. So if somebody's watching this and they are not doing it by that time frame, could you go back one? I just want to know how you want someone to deal with if they want to get in touch with you and it's after that date.
Sure, I'll honor the sale if they want to email me for the class. Like if they watch this and it's past the class time and they want to do the class in November, I'll honor it for anybody from your group from the webinar. Sure.
Awesome. Thanks
Email
so
me.
much. And I really appreciate your flexibility.
I didn't know how long I had to talk then because I was reading the message so that I feel like I rushed.
Usually we have 4 speakers, 45 minutes, and it's just kind of, you know, we had, I've never had this happen where somebody cancels like minutes before the webinar starts, but I mean, you can't control life and death.
I'm glad it all worked out. Thank you so much for having me.
Thank you. I appreciate you coming on, and I can't wait to have you back again. Thank you so much.
Sherry, I appreciate it.
Bye now. All right, folks, let's see. Our next speaker is waiting in the wings. I want to show my screen. I want to let you know that if you do have to leave early, you can find this recording at tradersexclusive.com/archived_webinars. And what I'm showing you on the screen right here is you go to tradersexclusive.com. You come here to, that's our home page. On the right side is Trading Education Webinars. And you're going to click that where the green arrow is. It's not like that on the page. But then you'll come and you'll see where our next webinars are. Our next webinar is November 3rd. And you can check out our past Traders Exclusive webinars right here. And you click that, and then you'll see all of the webinars that we've done in the past 1.5 years. We're really happy with the quality of our speakers and the fact that we get so many views on these. I mean, like so many views. So without further ado, I want to bring in Rick Sadler of Hit and Run Candlesticks. Rick has been with us a few times, and it's always a good presentation. And he's been trading and coaching traders for 30 years. He's part of his goal in trading was to help others avoid the difficult lessons he's learned all along the way. So he founded Hit and Run Candlesticks. And to show an example of how to grow a small account, in January 2018, he opened an account with $5,100, and since then has been able to grow the account 1,400%. And now he's teaching others how to do the same. And all the results are posted on the website, hitandruncandlesticks.com. And I think I had that right, didn't I, Rick? Are you with us? I'm going to make you presenter. I see him, but you're still muted. Self-muted. Yep.
Muted. How's
There you
that?
go.
Test 1, 2. Am I
Hey,
there now?
Rick. How are you?
Okay.
Thanks for
You're
joining
pretty
us. Thanks
close.
for
Yes,
holding
yes.
there.
Hi, Sherry. Yep.
Sorry for the rigmarole. I sent messages in the background, everybody, to say, can you guys speak longer? Because I was still waiting to see if we could fill in our mystery guest. And we do have a
No
mystery guest
worries.
for the time
No
slot after
worries.
yours. So I'm going to stop talking and you take it away.
Okay, let me share my screen here. Everybody be patient with me. This is always a challenge for me. Share my screen. I need to figure out which screen it is. There we go. That one right there. Okay, screen, everything is up. I want to thank everybody. Sherry, thank you so much for inviting me. I truly appreciate it. And I love doing these things, especially when we have, a set amount of time. Anyway, thanks for inviting me. I appreciate it. Also, I want to shout out to Melissa there, the speaker before me. I've been here listening in a little bit, kind of preparing, getting myself in the right mindset and cleaning off my desk. And I was listening to Melissa. What a great webinar. And I just thumbs up. Nice, nice. Every time I listen to any webinar, I always learn something. I always maybe it reminds me of something that I learned a long time ago, and why aren't I doing that? Things like that. So I think coming to these webinars that Sherry puts on is just absolutely fabulous, and the speakers she has here is absolutely wonderful. So, okay, so those that don't know, my name is Rick Sadler. I run the Hit and Run Candlesticks website and the business, and we also have Right Way Options that Doug Campbell works with, and we work together a lot. And what I want to talk about today is some of the volatility and how to get away from the volatility. And to be honest, I was listening to Melissa. Melissa touched on it a little bit, at least for the part I was listening to. And that's having a strategy, having a system. You can call it a system, you can call it a strategy, you can call it whatever you want. But I think that's very important. However, I don't think you should have somebody else's. I really don't. I think that's a massive mistake. I think it's a massive mistake to leave here today thinking that what I'm going to show you is the best thing in the world, because it's not. It's not the best thing in the world. It is the best thing for me. And you need to find whatever is the best thing for you. Now, it 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 may be this is the best thing for you, but it might not be. There are thousands, if not, well, I'll just say thousands. That covers it, of systems, strategies out there. And you know what? As far as I'm concerned, they all work. Okay, I'm not here to put anyone's strategy down. In fact, I want to help them and beef it up, because whatever they do, if it's working for them, they're making money, then it's the right strategy. If they're not making money, then it might not be the right strategy, or maybe just not the right one for the current market conditions. That could be too. So it is so important that you have that, and the reason, it's like a map. You know, if you I'm in Springfield, Missouri, by the way, and if I wanted to go to San Francisco, California, and if I didn't have a map, and if all I did was backed out of my driveway and said, you know what, I'm going to San Francisco, I know that's west, so let's just follow the sun. Honestly, that's a piss poor map, because yeah, it might get me to the West Coast, and it might even get me to California. but following the sun is not going to get you to San Francisco. Not likely. A little luck, if you're lucky, maybe. So having a precise strategy is so important. Having an absolute plan is so important. And that's what helps with the volatile market. And really, it doesn't take a lot. Let me get some things geared up here. Okay, why isn't that? Let me move this out of the way. There we go. All right. So for those that don't know, I'm not a big one for putting PowerPoint presentations together. I'm more about let's get live here. Let's get real in real time so we can show, what's happening right now and what we might be looking for or looking at right now. So let's start doing that. I do want to talk about a couple simple rules. Crazy simple. One, trade with the trend of the market. I find it's always best to trade with the trend of the market. Personally, my market is the SPY, S&P 500, and I use the SPY to get there. I also follow FNGU a lot. I follow this a lot. But when it really comes down to it, my market is the SPY. So if the SPY is bullish, I want to trade bullish. I don't want to try to get some super snazzy short stuck in there. I don't want to do that because I would be going against the market. So I'm going to trade with the market. Number two, the chart that I'm looking at, I want to be bullish as well. And I'm not into picking bottoms. We can look at EOG here, and boy, doesn't that look sweet. And wouldn't it be nice? I want to trade this, but you know what? I want to find charts that come off the bottom like this. Honestly, good luck with that. And as a whole, it's not going to work out. Why did it work out for this chart? Because it did, for no other reason. Now, I don't follow anything about oil. I don't follow anything about pharmaceuticals. I don't look at none of that stuff. I simply follow the chart. I want to keep it simple. Now, I don't know about you. Look, I've been around, I'm 63 years old, so I've been around a little bit. I understand a little thing or two, but there's no way in the world I can understand whether a particular company is ready to move higher based on its fundamentals. I can't do that. I truly, personally, don't even know very many people that can do that. But again, that's not my world. My world is short-term swing trading. Stocks move up, I take profit. Stocks move down, I get out. To me, there's only a couple of reasons why people don't succeed in the market. One is they jump out there before they truly understand what they're doing, and they get hyped up and what I like to call bullied into trading and bullied into a trade. Until you know what you're doing, don't ever take a trade. Don't ever take a trade if you don't understand the trade. If you don't understand what's going on, do not take a trade. All you're going to do is lose money. The odds of you winning that $500 million lottery ticket is far greater. Now, I'm sorry to be the bearer of bad news here. I'm sorry to be the guy that stomps out all your trading excitement. I am sorry, but it is the truth. That is the truth. I don't want you to come to Hit Run Candlesticks or Right Way Options that we're going to save the day for you. It's not going to happen. But if you do take the time, and if you do a little bit of studying, and by the way, the studying can be just a month. It can be 2 months for some folks. Me, I'm a little slower than the average person, so it might take me 3 months. But if you study charts and you don't run into the charts trying to make money right away, you'll be far better off. Because if you try to trade getting your money out there right away and try to make money and spend money right now on a position, all you're going to do, honestly, is help me make money. Again, I'm sorry for being the negative Ned here. I really am, but I want to be honest with you. Okay, so let's look at some things here. Oh, one other thing. This is massive. This is huge, huge, ATER. Let's talk about ATER because I actually bought this today. So ATER, I bought ATER. This is probably, oh, there's so many mistakes. Well, there's not so many. There's a few mistakes. Could be the number one mistake out there, but this has to be right up there, okay? So I buy ATER and I put a stop on ATER. All right, so let's just paint this red. And for whatever reason, and I'm not sure that's where my stop's going to be, but we'll figure that out before today's over. For whatever reason, the stock doesn't go up. The stock actually moves down a little bit, but it doesn't get to my stop. All right, okay. I'm not stopped out. So say I still like the chart. I'm okay. The market maybe is okay. We'll see at the end of the day today, and that is the truth. We'll see toward the end of the day. But if I don't get stopped out for whatever reason, and my stops say 848, I don't get stopped out and I hold it because I come up with some cockamamie bull story that, oh, okay, well, it fell down, but that's going to be that's going to be support. So what happens now is it moves down further. And again, I come up with some cockamamie bull story that, well, that's not going to work. Let's come down here. Let's do that. That's going to be support. We're close, so I'm going to hang on to it, right? So this happens. That is such baloney. That is such malarkey. Don't do that. One of the top, I'm going to say top 3 reasons that traders fail, or they simply have a hobby of trading and they don't make money, is they don't take the loss when it was presented to them, when they knew it. Just take the loss. If you have 3 of those in a row, maybe you should stop trading for a day. Just stop and take a look at the market. Maybe it's not your fault. Maybe it's the market's fault, but you need to evaluate what's going on. You can have winners for a week at a time. That's 3 days, 4 days, okay? You can have a winner even that 5th day. And say that 5th day turns nasty. All those winners right here add up to a tidy little sum. One stock, one chart, one trade that you don't abide by that stop rule and you keep following it down like this right here can eat up a week's worth of profits. Now, no one needs to answer. No one needs to answer, but be honest with yourself. Have you been in that situation? Are you in that situation now? Again, you don't have to answer, but think about it. The way to do that, it is so simple. Put your stop in and obey your stop. If you're wrong, you're wrong. Get over it. Get over it, okay? All right, so I want to talk about some trades here. BTBT, I bought some BTBT yesterday because it was a 3/8 trap. 3/8 trap is the system that I would like to share with you here. I love this. Now I have several other arrows in the quiver that I could use, but this is the easiest. This is the simplest. And I have learned over time, the easiest is usually the best. Usually the best. So I like the 3/8 trap. The trap is nothing more than the 3 EMA and the 8 EMA put together. We're looking for price in or just breaking out. Now, I wish it was completely that simple. It can be, but I also like to look at the chart. How did we get there? Now on BTBT, we've not made a ton of money on it today. I did sell half of it for 28% this morning. I bought it yesterday. Did I say today? I meant yesterday. I bought it yesterday. I bought an option. I buy nothing but options. Only directional calls and puts. Extremely simple. Don't hang up the phone here. Just because I trade options and what I'm showing you, don't think you can't trade the stock. You can. It's the same thing as trading directional calls and puts. You buy it, you sell it. Pretty simple, just like you would a stock. I apologize for my voice. I've been nursing a cold past couple weeks, so I can tell my voice is starting to crack, and I'm trying to push the sound out, so might sound like I'm yelling. I'm really not. Just trying to get that sound out there. So anyway, I sold half today for 28%. At the moment, I intend to hold the second half overnight. Okay, I'm looking for that breakout, but I wanted to protect some profits. Hey, there's nothing to sneeze at with 28%. Nothing at all to sneeze with. Another one, I told you about ATR. I bought Ford today. Now I've owned Ford a couple of times and I've sold Ford a couple of times. And I bought Ford today. So let's talk about that. Let's get rid of all this right here. So I'm gonna make this a little darker. There you go. Because that's the 3 exponential moving average right there. And this is the 8 or the 8 exponential moving average. We refer to it as the T line. So I bought Ford today because it was alerting on our alert scanner back into here. So I bought it. Now, admittedly, I've got it on a watch list. Admittedly, I've been kind of stalking it. But when it started popping up on the scanner, that was my key, my trigger, my alert, whatever you want to call it, because it's in my system. So let's check out my system really quick. SPY is trending up, right? Ford has risen and pulled back into the 3/8 trap. How hard is that? Ford has been trending. You can see that with the green dots here. And by the way, the argument here can be made back here as well, because here we've been trending. Here, if you're worried about that breakout, you can certainly wait for the breakout and then wait for it to come back into the 3/8 trap for a setup. Pretty simple. So how hard is that? The SPY's trending, or whatever market you want to follow. Maybe you want to trade only small caps. Follow the Russell. If it's trending, rock and roll. I want to see that rise. I want to see the pullback. I want to see signs of buyers. Pretty simple rules. Not hard, not complicated. Pretty simple. Right now, I can see that KMI is coming up on the scanner. This is a scanner window here that I'll leave this up here for you for now. Here, let me put it down here. There you go. So you can see KMI is coming up on the scanner. Here's a 3/8 trap. So what's the system? The system is the SPY is bullish, right? So we go to KMI. Is KMI trending? Yes, it is. Yes, it is. So I'm just going to put that there because this whole thing could have started right there. Look at that pullback in the 3/8 trap. Look at that trend that started. Look how we've broken out over those highs right there. Look at the current trend that we have going. Market's still bullish right now. I think it's a little overbought currently at this moment in the market. And today is Wednesday, October 20th for anyone that watches the video. But we are set up in a 3/8 trap right here. So is your buy here or your buy on a breakout? There's some things that you've got to figure out as a trader because every trader is a little different. It's not right or wrong to buy it here. It's not right or wrong to wait for a breakout. Some traders would make it. We could put 100 traders in a room, and 50% of them are going to beat the crap out of the other ones, and these up here are going to beat the crap out of these. There's no right or wrong whether you buy it here or buy the breakout. No right or wrong. It's your trading style, and this is why it's important to have a trading style, a strategy, a system. DVN is coming up. Look at DVN. Market's in a trend. Heck, oil has been killer. The chart's in a trend. Now, I will say with DVN here, I can't say that I particularly care for this chart, not 100%, as long as we have these two tall wicks up here. But if we break out, I could love this chart. So this might be one of those cases that I wait for a breakout instead of buying right in here. Telray. We bought yesterday we bought Telray pretty early on, to tell you the truth. It wasn't down here. It was up here because it was coming up on one of my scans, and it was a 3/8 trap at one point yesterday. It blew itself out of the water, but it did come up on one of the scans. We took the Telray trade. Many people in the room took the Telray trade and made goodles of money yesterday. These are things we announce in the room. We even have an app where we enter sometimes before I buy it, sometimes like 2 seconds after I buy it. I will post in the on the app, and you don't have to be in the trading room. You could be out on the golf course, you could be out in the beach, wherever you want to be, and you'll get an alert that we bought this or sold that. For instance, you would have gotten an alert that we bought Telray. You would have also gotten an alert today that we added to Telray. You would have gotten an alert on that BTBT trade, and you would have gotten the alert that we closed half of it when we did. You would have gotten that. So it kind of helps make decisions, maybe guide you through some learning how to trade maybe. I see TTM just popped up here. TTM, take a look at that. Beautiful trend, nice pullback. Now me, I love pullbacks. I love pullbacks. I love charts that have rallied and pulled back. I love charts that break out as well. So what I'm actually going to do is put a buy box up here like that. So I see a buy on TTM here or on the breakout. Either one. I'm not, because this is not the trade I'm necessarily looking for. However, if I was to buy it here and it moved up here and I made good enough money, I just might take half off the table, might even close it all. But nothing says you have to buy it here. A buy up here would be just fine because we're looking for charts to move higher, okay? So, that's just, it's just a very clean, very simple strategy, okay? Let me look at a couple other things that I'm looking at here. I'm looking around on my scanner. Oh, here's one. Wells Fargo. We bought Wells Fargo on this candle here, and we closed it yesterday. Yeah, I closed it yesterday. It made plenty good money. One of the simple little rules I have is 3 bars up, be very, very concerned. I was concerned enough that I just closed it out. It'll set up again. I'm not worried about it. It will set up, and we'll buy it back on that setup. Let's see here. What else might be coming up here? Rounded bottom breakouts lately have been acting good. So in a rounded bottom breakout, that's a different, that's a strategy in itself, but for the entry, I'm still going to use a 3/8 trap. So here's GLD moving up, SLV. Look how SLV was set up down here. Now, there's no way in the world that I would have known that SLV was going to gap up. I am not even remotely going to try to say anything like that. Call BS on me if I ever say anything like that. I have no idea that it's going to gap up. Some traders bought it in here, some traders did not. Oh well, if you missed it, you didn't. If you like this sort of trade where we go from a bottom, we rally up to a high, we make a low, we make a higher high, we make a higher low, we make a higher high, we break out of the 50-period moving average, we have a trend. If you're one of those traders that digs pullbacks, you may not know that it's going to gap up, but what a great surprise the next day. What a great surprise. The worst thing in the world that might happen here is you have a stop in there. So if you bought it here, you have a stop at 21.20. So what are you risking? I don't know. Maybe you bought it 21.56. You're risking a whopping, we'll say under 1.5%. Not bad. Easy strategy. Super, super easy strategy. Let's see. Another thing that I like to do is I follow the VIX. Now I'm trying to show what I do here, whether it's right or wrong, whether you like it or you don't. I think it's important to understand in real time what real traders are looking at and see how that might make sense to you. See if you can put it together. So one of the things that I follow an awful lot is the VIX, because the VIX is a fear indicator. And if the VIX starts rising, then that means that the buyers out there, the bulls out there, are nervous. A rising VIX makes bulls nervous. Or is it nervous bulls make the VIX rise? Not sure which one, but in the end, you get the same thing. So I watch this an awful lot. If you don't want to watch the VIX, you can watch things like VXX. It does the same thing. But I'm watching this. UVXY might be one. It's the same thing, only different. But I keep a close eye on these. If I start to see these rally up, then I get concerned. So here's an example. I'm nervous about this market right now. I think we're overbought. I think we're very overextended. And a little pullback would be perfectly fine. But when this, and it will, may not be today, but it will pull back. When it pulls back, not if, when, one thing I'm going to follow is that VIX. And if that pullback, a pullback by itself is okay. A pullback where the VIX is starting to jam is going to make me very, very, very nervous. And that may push me into getting out of long trades and maybe getting into short trades. MRNA happens to be coming up on the short trade list right now. Now I can make an argument how this actually could be a long trade as well. I could make that argument. So this might be one of these charts that I keep an eye on for both directions, long and short. So I want to share with you the 3/8 trap is not just for longs, it's also for shorts. And it's coming up on one of my short scans right now. And you can see how it's been in a downtrend. In fact, we can clearly see how it's pretty much has a top there and failed. For the time being, we can do something like that right there. And if we were to take that short, my stop would simply be the top up here. Simply the top. If it starts to come down, you're making money. How hard is it to do that? Now, the market is rising, so I'm not going to jump into a bunch of shorts. However, if I start seeing the market fail, I just might pick up a short or two, looking for the market to come back even just just a step back, just a little step here. BBBY is another one that is coming up on my short 3/8 trap scan here. This might be another one that I might be looking at. So a couple of shorts. We looked at a couple of, well, we looked at a few longs, I guess, a few of those, and a couple shorts. One thing I'm keeping my eye on today is the possibility of a shooting star on the SPY, but I'm also watching that 15-minute chart, watching it very closely here. The last thing we want is a fail of this 450, 250 up here. And another thing we don't want is to come down too low here. Well, I don't know. Let's think about that. If we were to come back to let's just say the 50-period moving average, these tops right here on the 15-minute chart. That wouldn't be bad on the daily chart. In fact, that would start getting us back into that 3/8 trap, and that would actually make me extremely happy. Extremely happy. All right, so let's look at some possible trades coming up. MNKD. If you like trading off the bottom, picking the bottom, I don't think this is the best way to trade, but there are people that do that. Now, this is not coming up on a 3/8 trap, so there's no way in the world I'm going to trade this. One, I'm not a bottom picker, but I do see it coming up. 3-bar chart is something I follow a little bit, and this is the scan that it was coming up on. One of my 3-bar chart scans where we have a little base, we break out, starting to cross the T-line here. Some people might like that. I'm not into that sort of thing. We already looked at DVN. What's KRE up to? Look at KRE. Look at that 3/8 trap in here. 3/8 trap, 3/8 trap. Earlier today, it would have been a 3/8 trap right there. What a nice chart. It's broken out now. So the 3/8 trap, we've got a 3/8 trap breakout. So what I'm going to look at is the fact we broke out, and then I'm going to put a buy box in here. Not hard. Keep trading simple. Let's go back to a couple basics. The market is trending. KER is trending. Two things we have to know, and they're not hard to know. They're very visual. And then we're looking for a rise and pullback. Pullback here, by the way, that would have worked. It went up, it didn't break the T-line, came right back down into the trap. Wouldn't have been the greatest buy right in here for sure, but it's starting to work. So we've learned two things: the market trending, the chart you're looking at trending, and by the way, it would have been trending over here as well. You don't have to wait for that. And then we're looking for a pullback or the entry, which is in the 3/8 trap or a slight breakout. And if you missed it, that's okay. I missed it as well, but that's all right, because here's another way to trade this. Since we broke out, I'm going to put this green box right here, like that. That's what I call the buy box. And I would be pleased as punch to buy this over the next few days in that area right there. I'd be pleased as punch. My stop would be relatively tight. My stop on this would probably be, I'm going to go to a 2-day chart just for giggles and grins. I'm going to try a 3-bar chart. Sometimes I'll look at the 2-day chart, 3-day chart for a stop. Sometimes well, that's a no-brainer. Sometimes a 3-bar chart. I use a 3-bar chart a lot. It's just 180 minutes is what it is. I'm going to put my stop right here at 71.35, but I'm going to give it a little breathing room. So I'm going to drop it down a little bit just to get off that. So 71.20, we'll call it 71.20, that blue line right there. Back to the daily, and there we go. So if I had an entry in that box, let's just split it. I've got less than 1.5% for a stop. Trading is easy. Trading is simple. Don't complicate it. Not once have I talked about any other indicators like stochastics or RSI or MACD. Not once have I talked about volume. It doesn't matter. Not for this. Trading is very, very simple. Very simple. Twitter. Notice the 3/8 trap here on Twitter. What a nice swing trade that would have been in here. I know several people in the trading room that have, or that I don't know if they're in Twitter at the moment. I know they were in Twitter. So they've made some money. Nice job. Very nice job. Let's see here. USO is coming up on one of my scans here after a 3/8 trap. You can see the 3/8 trap here. We're moving up. You can see the trend. Low, higher low. I use these red and green dots an awful lot. And when they go from red to green, that to me is a trend starting. So we've got a trend started here. Whoops, that's not USO. Good Lord. Sorry about that. There we go. There's USO. Look at that. Anyway, here's the red dots. Here they turn to green. The trend started here. How many 3/8 traps can we find in here? Let's see. So we've got a nice trend here. Let's make this there. So here we break out and pull back. There's a 3/8 trap. Rally up and pull back. 3/8 trap. Rally up and pull back. Here's a 3/8 trap. I'm not so sure I'm going to be a buyer there, but it is a 3/8 trap. Here we move, we pop up, we pull back. We're underneath the T line on both of those. I'm going to question whether or not we actually were at this time. But even if it was, here we pop back up. That would have been a nice 3/8 trap breakout all in one candle there. Here we rally up. There's a nice 3/8 trap. Rally up, 3/8 trap. Rally up, 3/8 trap. Rally up, 3/8 trap. How hard is this? It's not. It's just not that hard. Just not that hard. One thing is important is you do have to learn about the 3/8 trap. I think it's important that everybody understand it. I think it's important that everyone that wants to trade the 3/8 trap and you know all its ins and outs, both long and short, you know there's a few more rules added in there. So it's important to spend some time, listen to people that use it, explain the ins and outs maybe, things like that. MO is popping up. Look at that. We've gone from a downtrend, red dots, to green dots. We rally up, nice little pullback, 3/8 trap right here. So for those that's into AMC, even AMC, I'm not an AMC trader. Too much drama on that stock for me. But look at that, nice 3/8 trap here. Very nice 3/8 trap. What else do we have here? I'm kind of looking around. Let's see here. Looking here at the scanner. What is AEHR doing? AEHR. It's getting there. We'll see how that closes. Here's something I would like to share with everybody. I don't follow 10,000 stocks. I really don't. That's way too many stocks to follow. What I do is I use a specific watch list, and the CBOE 400. If somebody here is not familiar with it, we have it available in the trading room. You can get it. It's updated every single month. And what it is, it's the top option, how do I say this? Top option trades. I'm still not getting it right. So what that accomplishes for me is they're usually proven charts. Not proven in the sense they're not fly by night wannabes that get some big pop because of whatever. They're usually, you know what, I'm going to say every single time, they meet my volume criteria. They're big enough to trade. They're just good quality usually, and you don't have to worry about junk out there. And this particular trade setup that I'm using, the trap setup, this is actually a 317 trap. This is actually a 317 trap. But it is the top 400, and I add a couple more stocks in there of things that I want to make sure that I follow. The spiders might not be in here, and I have the spiders added onto it. And you can see it boils it down to only 63 possibilities. Keep trading simple. You're not going to make any more money looking at 10,000 stocks. You couldn't. It just drive you crazy. So, and then from there, I'm looking at stocks making a new day high. If I wanted to change this to a 15-minute high, I could do that, or 15-minute low. I have low and high here. In fact, for the duration of this webinar, I'm going to do that. And what it'll do is it'll pick this up. It'll pick the speed up a little bit. Yeah, it'll pick the speed up a little bit. And we can look at a few more. Say UR, RA, there we go. So let's think about our rules, okay? 1, we want the SPY in a trend. Now, you might say you want the Qs, you might want IWM. Just put in place what you want. That really is all you need to do. I know a lot of people that use VT. This is the total world stock market ETF. Write that down. This is a good one maybe for some people. Use VT. So you want VT trading, which the truth of it is, I've never found a big difference between VT and the SPY. So, but if you feel like you want to see the Vanguard Total World stock ETF, there you go, VT. It's in a trend, right? I forgot what stock we're looking at, so I'm gonna pick a new one here. Let's look at SPG. SPG, there you go. 3/8 trap. The trend is up. That looks nice. I'm going to mark this because I think it's worth to note that we've broken out. I'm going to put another mark up there. Where would you not like this chart? How about below today's low? So a buy right now gives us 1.5% stop, give or take a little bit. If you'd prefer to wait for that breakout, no problem. This still might be a good stop depending on where you bought it. I certainly don't want this to turn into 10% to my stop. Definitely don't want it to do that, which this one's not going to. We're still at about 2.5%. How hard is that? Let's go look at OXY. Well, no, let's look at Tesla. We'll take them right from the top. Even though Tesla has a red arrow, that simply means that on the 15-minute chart, it's making a 15-minute low. World's not coming to an end. Now, I do believe Tesla reports tonight, so keep your eyes and ears open. Look at the 3/8 trap in here. Any one of these candles could have been bought, but every trader, Joe, you might have bought, you might be into moves to the downside. Jack, you might be looking for bullish candles. Nancy, maybe you like dojis. Either way, we're in that 3/8 trap and it's just bebopping along. You know where your stop's going to be if it closes outside the trap. Not a one of those closed outside the trap, below the trap. And now, poof, here we go. Now it does have earnings, so no way in the world I'm going to trade this, but it's in that 3/8 trap right now. It's not close enough to the T line, and there's no buy signal, so no way I'm going to buy that. But it's in the 3/8 trap. Let's look at XME. You can see it coming up on the scanner here. This is live, real time, XME. It is coming up on a 3/8 trap. It is doing what I want it to do. However, maybe you want it to break out here. Maybe you want it to do that before you buy it. And seriously, do you have to buy it here to make money, or can you wait till that breakout? You know, if your bones are made in that little bit, then you've got the wrong impression of trading. Wrong impression. Hey Sherry, I have no idea how much time I have, or I could go
actually would
all
love
day
it
if you want.
Can you hear me now?
I can.
If you could take a question or two and then
Sure.
wrap it up, that would be awesome.
Okay.
Today has been a little bit different since
I understand.
we did have someone cancel just minutes before the event started. So I'm not really well versed in how this is happening. I really appreciate you talking a little bit longer and waiting
yeah,
too.
I'll do whatever you want to do here. Shoot me some
But
questions.
we do have a mystery guest who is able to jump in and he's ready to go. So whenever you're ready, we're set.
All right, let's take some questions. Yeah, let's take some questions here.
All right, if you guys have any questions for Rick. Now, Rick, how are they going to get in touch with you? And do you have some kind of offer that you'd like to share?
Well, you know, you can find it. I'm bringing up our website right now. You can find us at hitandruncandlesticks.com right there. You know, we have the right Hit Run Candlesticks, a 30-day trial. Right Way Options has a 30-day trial. If you want to do both, it's $49. Here's what I will definitely do, though.
I put that link up there for everybody.
Yeah, thank you. Here's what I'll definitely do. If you take a trial, the scanner that we use, normally there's a 14-day trial on it, and then it's $97 a month. But if you take a trial, say by Friday, then I will make sure you get the scanner for a full month for free. And I will also be available to help you dial it in. But you're going to have to reach out to me, okay? I'm not going to reach out to you. You're going to have to reach out to me. And a good
And how are they going to let you know?
Right here. This is perfect. See right here where it says contact us? Right
okay. There you
if
go,
you click
people.
on that contact us.
Candlesticks.com.
Yeah, and just all you got to do is reach out and say, hey, Rick, I took the trial. Can you help me dial in the scanner? And we'll make sure you get it downloaded. I will help you dial it in. And here's what I mean by dial it in, by the way, is you may be somebody that uses MACD. You may be somebody that uses stochastics. You may be somebody that only looks at breakouts. I'm going to stop right there. I'm actually going to open up a new window. And you might be, who knows? Look at all the possibilities here. 2-bar lows reversing up, prior 3 higher closes, ATR, ADX, a rune. If anyone ever follows the rune indicator, bullish, bearish, average volume, volume crossovers, bear, everything that's mentioned bullish, there's also a bear to it. Bear 3-line strike setting up, bear 3/8 EMA crossover. I mean, no one expects you to know everything in here. That's why reach out to me. We can talk about what you want. And a simple thing is to, OBV, MACD, a simple thing is to look at a chart you like, and maybe you like this BTBT chart. And you say, okay, Rick, help me find charts like BTBT. Help me find charts like TZA if TZA trips your trigger. Help me find charts like Ford. That's not Ford, Ford. Whatever you want. We can help you find those charts. So in Friday, you have to sign up for a trial by Friday. If
All right.
you
That's
do
2
that,
days from now.
you come over here and you click on contact us and you say, Rick, I'm reaching out to you. Keywords, reaching out to Rick. All right. And I will get you going in this, and I guarantee you a 30-day free trial. No credit card is required on this thing. Of course, you'll already be in the trading room, so that's all cool. And then whatever you need to do, I'll help
And
you with.
Rick, what happens? Okay, so what if someone's watching this as a recording and it's past Friday? What should they do?
Reach out to me. You know, I'm not a mean
Okay, reach out.
guy.
All
Excuse me.
right.
That's my
I
cold coming
think,
up.
oh man,
Just
I hope your
reach out.
cold gets better.
Just say,
I
Rick,
hope you
I'm
get well.
reaching out. That's the keywords right there.
Okay.
And I'll know that well, here we are. Sherry, I want to say thank you very much. Thanks for
Thank
inviting
you.
me. I'm looking forward to the next time.
I am too.
I looked at your lineup. You've got a great guest list here today.
Thanks.
Job well done, Sherry.
Oh, thank you.
I know you've not been doing this for a lot of years, and I know you've worked very hard on it. And I want to tell you that I think you've done a fabulous job, and I truly mean that. Thank you very much.
I really appreciate that.
You bet. You bet.
Today especially, I appreciate that.
Yeah,
So
no,
I
it's all
look forward
good.
to the next time too.
All righty. Hey, everyone, take
Okay.
care. Thank you, Sherry.
Get in touch
Everybody
with
have
Rick,
a wonderful day.
everybody, and have a good day, sir.
All right. Bye-bye.
Okay, bye-bye. All right, folks. We have our next speaker is Simon Jousef of the Trader Institute, and he has graciously agreed to step in and help us out because we had a person have to cancel at the last minute. I'm going to show you a little bit of something and introduce him, and then we will be, he'll take on over. I just want to show you. Remember, we do have a recording of this. Simon's going to talk to us about using volume profile trading futures and Forex. And he's been with us before. I really appreciate him being willing to come on at such short notice. And one of the things you need to know about Simon, he's the head trader and the trading educator for the Trader Institute. It provides day trading signals, market analysis, and education. Simon held his first public class in 2004, and by 2010 had switched to online conferencing due to global demand. The Trader Institute focuses education and training on the core of what moves the markets. It's about buying and selling, so volume or volume pressure is key to understanding the markets. The market makers are the ones who control the moves, and with Simon's dynamic math-based indicators and system, you can see the moves ahead of time. Simon, thank you so much for coming in on such short notice. I'm going to make you the presenter. Do you like questions during your presentation, or do you like them held to the end?
Good afternoon, everybody. Thanks, Sherry. I have half hour to present. Let's leave them to the end, please.
Oh, thank you.
Yeah, I
Okay.
have 30 minutes to present, but that's
Okay.
not a big deal to me. If I can start now, I can maybe do something in 30 minutes. The
You
main
talk
thing.
fast. They can watch the recording later and slow it down.
All right. So.
And I do have your handout loaded.
Excellent. Thank you so much. So in 30 minutes, I don't think I'll be able to cover everything, folks, but I use something called volume profile for trading futures and Forex and CFDs, mainly futures. And if I give you a snapshot of what we do, this is the NASDAQ. In fact, I just called a short right now, today, here from this line. Just while I was waiting for my turn, I called it right here. And how I called it is I went to my Telegram channel. This is 24-hour Telegram channel. You see that? This is one of the avenues that we use to deliver the signals and the education. One of them is live trade room that I have 3 days a week. The other way is I will show you it's a members area, and this is daily 24 hours. We have indexes, We have elites talking and chatting. My members, 154 elites, 164 index traders like the NASDAQ, whatever. And I have metals, I have oils, and I have currencies. So just now, if you look at the time, just now, this everything is time-stamped. I called it short, but the stop loss was a bit large. So I told everybody, take it as you think is suitable for your account. So I called it short. Right now it's going down in favor. We got in between 70 and 80. So that's one of the avenues. So today I'm going to be talking about using volume profile for anticipating the moves and confirming them. Okay, anticipate, confirm, execute. That's the style that I always use. In case if you want to learn more, it's easy. Sherry has loaded a handout. It has more information about us. Also, there's on my website, which I will share later, there is a way to get a 2-week free trial. 2 weeks free trials, no obligations. Join us for a free trial. If you like it, you can continue. We have different offers. I'm not going to be selling anything today. I don't have time for that, and I don't do selling. You buy if you like. Make sense? So using scalping and swing trading, futures and forex using volume profile. Before anything, I will show you how to watch and navigate the website. This is our website, okay? And there's a banner says 1,000 ticks every month, and it is really not an exaggeration because last month we ended with 2,700 ticks. I will mostly I would call trades for swings, midterm trades. I don't do a lot of scalps because there's not enough time for me to type it at the same time and call it. So basically it's swing. So 1,000 ticks a month, it's not an exaggeration. You will come to the trial and you'll see it for yourself. To obtain a trial, you just simply go to where is it? Here, get your 2-week trial right on the top. Click there, and you will get a page telling you what to do. It's simple. Just email our team, sales@thetraderinstitute.com. You also watch the video here that will prep you, will make you prepared to the trial, see what we do exactly and how we do things. Okay. Now, not to waste time. I'll tell you a little bit about how I started this. I started with a long time ago, started with Forex, switched to futures. I was heavily dependent on what made sense in the market because technical indicators didn't make sense after a few months of looking at them. What made sense was what moves the market. What moved the market was simply the buyers and the sellers, the volume in the market. So I dedicated my time to understanding the tape, which is the ladder, the bid and ask ladder. That was a few years, and then I had to simplify it further. So with time, I simplified it to something very nice, and we call it a volume profile. Now, looking at volume profile, let me show you today what we have done. Let me look at where's my chart? Just a second. Okay. This morning, let's remove all these. The charts are disconnected, so you will not see them moving. This is a volume profile for let me remove this line too so I can start from. This is a volume profile chart. You see on the right hand side, it gets bigger, it gets smaller. As you see here, you can sharpen the edges as you see. You can smoothen the edges as you see here. Up to you, up to your preference. I like them sharp so I can see every single move. But this morning, the market was a little bit hesitant, but at here, at 10:30, you see, 10:32, 10:33, I said, NASDAQ looking, NQ looking for a short. So this is seen by all my members. So at that time, the NASDAQ was, if I show you, the NASDAQ was right on top, right there. If you look at the bottom, it's 10:30 a.m. regardless. But what prompted me to say that the NASDAQ is looking, and it was right here at the top. And if you look at the price, I said 15,442. And you look at the price, the top price is 15,442, 440. What prompted me to decide that the NASDAQ is going short? Look at the volume profile. Volume profile is an indication to what you should anticipate next. Again, we don't trade based on volume profiles location. We anticipate the next move, because I will tell you about something else that we use, which is as powerful, if not more powerful, which is a way to confirm it. So if you look at the volume profile, take away this line, and if I expand this is a long-term daily chart. Watch how we had the NASDAQ covering up this zone. Okay, prior to that, it covered up this zone. You see those squares? Prior to that, it covered this zone here. So I teach my members how to break the volume profile into zones, whether it's long time or short time, it doesn't matter. We break it into zones. And then the NASDAQ, all of a sudden, it poked above the zone. It poked above the zone, and I told everybody, I'm looking for a short. It was fast. It didn't give me the chance to call it, like directly call it. But I said it's going to come back down, like 100 points down, which is to almost 100 points. NASDAQ can go down to 15355. Folks, that is almost 100 points down. And if you look at the NASDAQ from the top to the bottom, this was the top. 1355 was here, right here. Here, this was the top. This was the bottom. This was the top. And if you look at the NASDAQ, it came back down to here, from the top to here, and actually exceeded. At one point, I had a member, if you look at this, said here, at 1:16 p.m., it says, good read on NASDAQ, Simon. Members trade these levels, although I did not call it, so I didn't take any credit for this trade. I did not call, because when I call a trade, folks, I don't say that we have resistance and support only. That's not considered a trade call. My trade call will be something like RTY possible long. RTY support is at this level. No confirmation, let it go. But when there's confirmation, I will say it clearly. I will say that we have an entry at this price. This is your stop loss, and this is your target. This is target 1, target 2. To know more about what we do on the website, on my website, you will have videos on the website. If you go to the website, scroll down or whatever, I think you will see it on YouTube. This is YouTube channel right here. If you click on the YouTube channel, this is my YouTube channel. Scroll and you will see videos. It explain exactly how we trade from the live trade room and regular trades. You will see how I call the trade exactly, how I call the stop loss ahead of time. To be fair to your time, I will explain to you a little bit about how I look at the trades and how I call my trades. First of all, we do 3 contracts. So when I call a trade, it's called on 3 contracts. Target 1 is on 2 contracts, 2. So if I get my target 1 at, let's say, 20 ticks times 2 contracts, so I made 40 ticks already. And we leave a runner and we move the stop loss. Okay, that's that. That being said, let's see how most people, especially the newer traders, learn to trade. Let's say we have a long, and I had a long today on crude, which I will explain. Crude is coming down. It's coming down and you say, okay, it's coming down and I want to look for a long because it was going long initially. Now it's coming down, you're looking for a long. Some of you will say, okay, I will look for a long from here because this is a retracement, let's say Fibonacci retracement. Some of you will say, no, I will look for a long from here. This is a better retracement. This is 50%. Oops. No. This is 50%. This is 32%. And some of you will say, no, 62% or 68%, sorry, is the best, 68. How do you know? Market comes down to 32%. You take the trade long. You have 30 tick stop, whatever random stop, because we don't do random stops, and I'll explain. Nothing is random in my trading style. Comes here, takes you out, goes up. You say, no, it's okay, I'll take it again because the area might hold. You take it again, comes back down, stops you out. You say, no, 50% is better. You take it again, comes here, stops you out, goes back up, and you miss the trade. That is, to me, random. First of all, you don't know where your stop loss is. Second of all, market makers know how you think. Market makers know that Fibonacci is a big deal, RSI is a big deal, all the technical indicators are a big deal, the daily high, the daily lows, and they will use it against you to move the market, okay? So for us, it's kind of a little bit different, simply because, I pressed the wrong button, simply because at this point, the crude, this is the CL, when it was moving up and down, it created levels. Okay, it created levels. This is, I showed you on the volume profile, levels of, you see, this is the crude, for example. And if you look at the levels, you see those levels are continuation up and down. Let me take the blue lines out. Leave the magenta lines are what we confirm with. It's confirmation. It's a very advanced indicator, reads the market depth and gives you certain signals to confirm. The charts are stalled, are disconnected, so you don't see them moving, but I will explain. So these levels here, as you see, we have continuation zones. We have another continuation zone, but it looks blue and it looks like a belly, and we have valleys. All these are continuation and rejection zones. They're all different, but they're all tradable. They all refer to something, some kind of move. You only need to confirm and find your stop. Going back, so the market created, when it moved, when the CL moved up and down, it created levels. It created levels like this, okay? Created levels. We call these levels continuations. In between, we have levels. We call them rejections. So far, so good. So continuation, continuation, rejection, rejection. Now it's easier to understand. Why? Because if I have a Fibonacci line here, do you think I will take it long? No, because we are in the middle. Look at where we are. We're in the middle of a continuation zone. Stop losses will not hold. I will wait for it to come back down. Another Fibonacci level here. Do you think I'll take it long? No, because it still has ways to come. So finally, it comes back down to the rejection level right here. And now I'm thinking to take it long. Why? Two things. The main thing is it is at a rejection level. You see, it is at a rejection level. This is not something technical. This is volume. This is market makers' volume. This is what they do. Second of all, I know my stop loss. If I take a trade right here, do you think my stop loss will be at the green cross or it will be at blue? Absolutely at the blue. Why? because if we punch below the blue, it could continue all the way to the green. So instead of giving 30 ticks loss, my risk is now only 10 ticks or 15 ticks. Do you understand the urgency of trading with already known stops? I need to know where my stop loss is. What is my risk ahead of time? That's what I need to know. So third thing, which I didn't mention, I know where my stop loss is. My stop loss is at the blue, right here. What else am I waiting for? What will stop this market from popping lower and taking the stop? Nothing will stop it. Therefore, you need something called confirmation. You need market makers to start joining these trades. You need to see pressure mounting here. How do you see pressure mounting here? A lot of you probably using market depth. A lot of you using ladders, the bid and ask ladder. It's not easy to find it or to see it with your naked eye, right? So I developed something a few years ago called SAL indicator, SAL. It was a continuation of an indicator that I created back in 2005, 2006 called here price magnet from the volume that is embedded inside this. So now I don't use that anymore because now everything is embedded. Okay. And the strategy that I use is anticipate, confirm, execute. So we talked about anticipating using volume profile, correct? Using those levels of continuation. Now I need to get my what? I need to get my confirm and execute. Confirm. How do I confirm my trades? Let's go back. At this level here, I'm ready to go long, but I'm waiting for market maker. So all of a sudden, if I see SAL indicator, and the SAL indicator that we have, my colors on the lines are magenta lines. Some people make them different. It's optional, but I will see magenta lines popping up. This is where I see action. This is where I call it long. Sometimes it's already there. I don't need to wait. SAL indicator levels are already sitting here. So that's a long. Just, take it and enjoy it. You know your stop loss. Usually the first target is going to be something like, first hiccup on the way, and then we continue. But that will be a detailed lesson if you join me for a free trial. As I said, free trial, just go to the cells here. I'll go back again, go to the website. Okay, go to your, get your 2 weeks trial. It will ask you to send an email to sales@thetraderinstitute.com. Okay. Going back, a live example of this today. I have this. Let's go to the channel. Let's go to the crude oil, and let me bring crude oil chart. Here's the crude oil chart, and this is this morning. This is this morning. What is the bottom this morning? The bottom today, 1597 tick chart. Oh, just give me a second. It's 80.80. 80.80, right? 80.80. What time? 80.80 was the bottom of the day. At 9:13 a.m. You see the bottom? I don't know if you guys see it or not, but it's 9:13 a.m. Eastern time. This morning on oil, and this is October 20th, I said, folks, first of all, I'm switching to December contract. That's it, switching to December contract, because I'm also looking at oil, crude oil futures, and I'm also looking at US oil, which is a CFD. Okay, so I realized the contract traded is December is more liquid, and look at this price at 913. 903, 10 minutes ahead of time. Folks, this is 10 minutes ahead of time. I have support at 80.80. Okay, I did not call the trade. This is not me calling the trade yet. I said I have a support. So if you took the trade and you made $1,000, good for you, but I'm not gonna take credit for it. I just gave you the heads up. Most members, full-time members, full members, they know the drill and they have probably took it because they also saw the magenta line. Look at the magenta line at the very bottom. This was the confirmation. You see the magenta line? This comes from a SAL indicator. I told you about it. So 10 minutes ahead of time, I realized it's going to be a long, it's going to be a support. At the same time, 10 minutes ahead of time, 9 minutes ahead of time, I said my stop loss is going to be 80.60. So folks, before I'm calling the trade, I am telling my members my stop loss is going to be at 80.60. So my stop loss is at 20 ticks risk right here. Okay? And all of a sudden, at the market at 4 minutes after, it comes back down. You see how aggressive this wick was? It comes back down to 80.80 and bounces. It did not give me even a chance to call it. And what was my target? Folks, do you see my target? I said, and I will try again at 81. If it retraces down, it never retraced down to 81. See, it went up. It went to 81. It retraced as down as 81.29 or 81.28. It never retraced to 81. But look at my target, folks. We'll look for this is at 9 a.m. Before everything, before anything I did, I said I'm looking for 84 target on oil. What is the oil sitting at now? 83.30, right? So from 80.80 to 83.30, that is 350 ticks move that I missed because I don't want to trade randomly, because the rest of the move that happened, the rest of it was I could not find a proper stop. Again, I could tell you where the market is going to, but if I don't trade it, doesn't mean that I don't know how to trade. It just means I don't have a proper stop. I have to find a reasonable stop. Same thing with the NASDAQ, folks. I told my guys this morning, I said NASDAQ is going down. Here's the NASDAQ and indexes. I said the NASDAQ today is the 20th. The NASDAQ is going down. See, at 10:06 a.m. I said NASDAQ main support today is 15355 area, which is this line. It might drop to that. So I have the direction, I just could not find a proper entry. Okay, so there's a lot to cover, folks. This is a very comprehensive way of trading. This is very solid way of trading. There's a reason why I cannot sell you anything, because it's complicated, really. I mean, you have to see it to know, and then once you're comfortable with it, you will see how easy it is. It's not complicated. It looks complicated, but it's not. It's a matter of thinking. We use Sierra charts. My indicators work on Sierra charts for a reason. Nothing is random. I try to work my indicators with NinjaTrader. They don't work because it's designed differently. The platform is designed differently. So I cannot get that market depth continuation historic data with NinjaTrader, nor with any other platform. Once you become a student, you have lessons, all of them lined up. For example, advanced profile. If you click on it, you will learn how to use the volume profile. Everything is listed here. It's a crash course on volume profile is the main thing that you need to learn. It's all made up with videos. It's very comprehensive. It will take you maybe a week or two, maybe a month or two, but my promise to you is the support, and I will hold your hands. Sherry gave you this handout. Please use it. And if there is any questions, where do I see questions? I don't want to take away from the other presenter for the next presenter. I think I will be done in 3 minutes. So Sherry, if there's any questions, I have a lot more to say, but please join the trial from the
Yes.
website.
Now, I did put in the URL for the traderinstitute.com/2-week-trial
Yes.
so that they can get to that page. I hope everyone who's listening will take advantage of this. And if someone's watching the replay of this, Simon, does that still apply later?
Absolutely.
Is
This
a
volume profile is not
limited time?
special for today. It's for anybody who visits the website or
Awesome. Okay. I need to tell you, I really appreciate you being so flexible to come on such short notice. I'm truly, truly grateful.
my pleasure. No, I'm glad.
So there's I don't see any questions yet, but does everyone see the handout? If you look in your navigation there, you should have a handout, TTI, new handout, and you should avail yourself of that. It's got all the links in there that you need. And other than that, do you have anything you'd like to add?
It will be hard to choose anything. I tried my best to explain things. Volume profile is key, folks, to your trading. It gives you the true levels. Again, you will need at least 2 weeks to understand. And if you don't become a member, at least you will learn quite a bit. So I encourage you to email our sales department. They will qualify you. There's no money. You don't need to pay anything. There's no money involved or anything like that. Hopefully you will like it, and hopefully we'll see you in our trials. Thanks, everybody. Appreciate it. And thanks for the opportunity, Sherry.
Thank you. Have a wonderful day. Thank you
Thanks.
so much. All right, folks, here we go. I have my next speaker is waiting in the wings. And let's see, I'm going to show my screen. Next up is Dan Passarelli of Market Taker Mentoring. And I wanted to let you know, let me see if I can get some things out of the way here. Dan's talking to us today about total earnings domination. And, you know, as a trader, it's your mission to empower yourselves with the knowledge you need to invest successfully. And that's why Dan is here today. He is really renowned with teaching this. He's a trader and author, a world-renowned trading expert, a former member of the CBOE and the CME, a frequent contributor to Bloomberg Business Television, Fox Business News, CBOE TV, and a resource to journalists. He's an invited speaker, educating traders for organizations such as the NASDAQ, the CBOE, the International Securities Exchange, CME Group, Fidelity Investments, TradeStation, TheStreet.com, and the Shanghai Futures Exchange, just to name a few. He's also a marathon runner, a musician, and a world traveler. So please welcome Dan Passarelli for me.
Hey, Sherry, thanks for that kind introduction. Much appreciated.
Hi there. Good to see you. Let me see something. I'm making you the presenter and getting out of your way.
Okie dokie.
All right. I will be quiet and you have the floor. Thanks for joining us.
Thanks. All right. Here we are. I want to make sure everybody can hear me. If you can, just give me a yes in the questions box really quick. Would you give me a yes in the questions box? All right. Thanks, Rob. Thanks to the rest of you guys. All right. We're going to talk about how earnings trading can be your most profitable trade. Before we get started, I want to point out options are not for everyone. You should read characteristics and risks of standardized options before trading. Now, here's my promise to you. I'm going to share with you how you can replace uncertainty with confidence so you can profit consistently no matter what the stock market is doing using this simple, data-driven, real money proven earnings trading system that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And that is powerful. This can literally transform your life. This technique I'm going to share with you makes it all possible. It uses my proprietary earnings trading system. And at the end of this presentation, I will share with you how you can take the next step so you can start getting immediate results. Is that a fair deal? What do you say? Is that a fair deal? Go down to the questions box and give me a yes. Give me a yes. You liking this? And don't be afraid to participate here because we're going to have some fun today. George says yes, and Rob says yes, and Mike says yes, and Steven says yes. Awesome. Okay, great. And be sure to stay until the end of the presentation. The most important things I will cover come later. I'm going to go over the 45 minutes because I've got so much important stuff to share with you. So plan on sticking around. I'm going to hold questions till the end so we don't get off track. This is a pictorial representation of who I am, what I do, and some of the organizations I've worked with. I traded for years down on the floor of the Chicago Board Options Exchange. Wrote 2 of the most popular books on option trading. I worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well. And I get to be on TV a lot. I'll tell you more about that later. If you spend enough time in an industry, 28 years for me, you end up getting to do some pretty cool things. But enough about me, let's talk about you. I know some of you have traded earnings and some of you have not. Here's the thing, if you have traded earnings, I can help you do it better and be more profitable with less risk. And if you have not traded earnings in the past, then you're in the right place at the right time. And today, I'm going to share that process with you. All right, you're going to love this. Do you mind if I share a quick story with you? Would that be okay? Yes? Would that be okay if I share a quick story with you? Mike says yes. Steven says sure. Rob says okay. Michelle says go ahead. Okay, great. So this is me with my little sister. This is probably 1979 or something. A lot of kids think they want to be a doctor, fireman, teacher, whatever it is. But for me, I always wanted to be a trader, even at that age, which I know is kind of weird, right? But I did. I saw traders on TV in the movies, and growing up in Chicago, there was a lot of on the local news and financial district with their jackets and all. These successful traders, they were all around me in Chicago, and it excited me to think that they could make money, good money, trading. So right out of college, I took a stack of my resumes. I went job shopping. I literally knocked on every door of the Chicago Board of Trade building, handing out those resumes. And lo and behold, guess what? I got a job. And that's where I cut my teeth. I worked my way up from a runner, which was a totally entry-level position. In fact, my first job out of college was making $9,000 a year, right? Like not enough to cover my expenses. But I knew that it was important to be around successful traders and to learn the techniques of successful traders who were making money. I ended up becoming one of the biggest traders in my pit, and I started actually trading in 1998, and life was good. I was living the dream. At that point, it might have been the best time in 30 years to be where I was. In a lot of ways, I just happened to be in the right place at the right time. Trading was easy. You could make some mistakes and still make money, because you remember what was going on in 1998. Do you remember what the financial media called it, or at least called it shortly after that? It was called the internet. What was it called? That's right, Mike. The internet bubble. Yeah, Michelle says .com. Right. So that's right, the internet bubble. And do me a favor, type a yes. And actually, I would like to take a poll here. So if you don't mind, I would like every single person to answer this. This is going to be fun. I want to kind of break down the percentages here. So I need everybody's participation here. Type a yes if you traded during the internet bubble. Type a yes or no to answer the question, did you trade during the internet bubble? Michelle says yes, and Rob says yes, and CP says yes, and George says no. Mike says yes. Stephen also says no. Well, I'll tell you what, for those of you who said no, that's okay, because I'm going to share with you an opportunity that you can take advantage of right now that can make you the same sort of gains, and it's just as easy to trade, if not easier. Speaking of that old internet bubble, you know what happened, right? In fact, you know what eventually happens to all bubbles, right? That's right, they all pop. And for most, when the internet bubble burst, it didn't really look like this. Like this cute little girl who blew the bubble and she's gonna pop it and then she's gonna like dance around and giggle, fall down and all that. Like it didn't really look like that. It was something more like this. This is basically what happened to a lot of people. And I don't really talk about this a lot, but this is kind of what happened for me. I'd never seen a crash like that in my career at that point. Back then, I didn't know how to handle it. In some ways, I did better than some, but it was bad. All of a sudden, nothing worked as it had before. Trades I'd normally crush weren't making money. I started to lose my confidence. I was constantly second guessing myself. I'll never forget this one time where I just got completely run over by a trade. I lost $500,000 in a single day. That night I had to go home and have a conversation with my wife, Kathleen. The plan was to put my next bonus away for a kid's college funds before that. That bonus was now gone. The kids' college funds were now gone. And I wondered if I'd still have a job. I wondered if I'd be able to keep my house. Now everything was different. But you know what? That's when I knew that I had to create a trading system that works in all market scenarios. And as fate would have it, at that exact moment, I was presented with an opportunity. And it's funny how opportunities seem to come right at the right time, isn't it? And when you get an opportunity, what do? When someone says 1, 2, 3, boom, here's a great opportunity, what do? You take that step, right? There are two types of people in this world. There are those who second guess everything. Those are the people who are always looking back, not forwards, who hesitate. And then there are people who take action and create success for themselves. And from the outside, it seems like these people are always, getting lucky, right? But that's not it, is it? They take action. Another poll, type a yes if you're the sort of person who looks forward and takes action. If you take that step, hit that questions box one more time for me. Are you or are you not the type of person who takes that next step and carves out his or her own future? Go ahead, hit that questions box. This is a poll, not a rhetorical question. George says, I am, with all caps. Man, that's decisive. I love that, George. That's so great. Rob says yes. And Michelle says usually. Okay, all right, that's fine. Steven says yes. Mike says not always. Well, I'll tell you what. The most successful traders all have the same trait. They take action. It's about having an investor's mindset. It's about investing in yourself. You can't make a profit if you never make the investment, right? Like many opportunities can, this opportunity I was presented with changed my life, and it set me down the path that I'm on today. the exchange asked me to come and teach classes for them. And I found that that was my calling. At that time, I started trading in a regular non-professional trading account like you. I was learning a different way to trade than I was used to. And I discovered that there were strategies that I wasn't using on the trading floor, or at least not trading them the same way, that were very powerful, that could make money in all market conditions. I made it my life's work to give back to the trading community and share these strategies with all traders and empower you however I can. And that's what led me to creating this earnings trading system that I use and all our top performing traders use. Let's go back to simpler days. This is pre-COVID crash. Goldman Sachs was up 23% over this 12-month period. Question for you, another poll. Would you be happy with a 23% return in a year? Would you? This is not a rhetorical question. I'm taking a poll. I want everyone to participate. I want to know, would you or would you not be happy with the 23% annual return? George says yes. Rob says no. Richard says yes. Mike says sure. Okay. Stephen says of course. Michelle says yes. CP says no. Now that's interesting. And I think some of the folks who said no have an interesting perspective. And I like it. 23% a year is tough for some people. But what if I told you there's a strategy that it doesn't matter if the market goes up or down, is volatile or calm, you can still make money consistently and potentially really good money? Well, here's the news. Traders can do better than returns like these, and you have to. Interest rates are near zero. That's bad for banks. People are worried about inflation. That's bad for money managers. But do you know what saved firms like Goldman Sachs lately? Their trading units. Look, Goldman has 36,600 employees. The average salary is $367,564. That includes all the interns that pick up the dry cleaning. That's a total salary being paid out each year of $13.5 billion. And that's before bonuses. And traders trade, that's their big compensation, is the bonuses. In order for Goldman Sachs to pay out $13.5 billion and all those bonuses and still retain enough cash to grow their company by 23%, they must make hundreds of percent a year. These are the kind of trades professional traders make. That's why they make 300 or 400 grand a year before those gigantic bonuses. When I started on the trading floor, I started with a $30,000 trading account. Making trades like this daily, weekly, and monthly enabled me to turn that $30,000 well into the seven-figure area. That's more than 23% a year. This is what's possible. This is what traders are doing every day. And it's not just professional traders. This is Vic. He was one of our traders who traded our earnings system. He says, I've been trading for about a year, but 2020 was one of the most difficult years, if not the most difficult year, to trade, especially for a newbie like me. In spite of all the challenges, huge market up and down swings throughout the year, and all the crazy stuff happening, I actually did pretty well overall, increasing my account value by over 30% between June 20th when I went live and the end of the year. Over 30% in about 6 months, that comes out to more than a 60% annualized return. And he was brand new to option trading. Imagine what you could do with a little experience. Let me start off with a question. If you could consistently make money week after week, month after month, would you trade with more confidence? Hit that questions box for me. All right, hit that questions box for me. If you could consistently make money week after week, month after month, would you trade with more confidence? Richard says yes. Rob says absolutely. CP says of course. George says yes. Mike says of course. Steven says yes. Right. Because look, confidence comes from consistency in your trading. But how do you do that? In order to do it, it's essential to have bread and butter strategies, just these go-to strategies. Not be able to guess better, get lucky more, but to have data-driven strategies that are tested with real money, profitable, right? Created by a professional trader. And the strongest consistency trade right now is the earnings trade. And there's several advantages to earnings trades. First of all, they're market independent. When we make these trades, we don't care if the stock goes up or down. They're very short term on each trade, which limits broad market exposure. The market's trending higher or lower, it doesn't matter. Potentially greatly leveraged profits. There's an extremely simple yes-no test to screen the trades. The opportunities are concentrated in a short period of time. The biggest week of opportunities is next week, starting October 25th. In fact, remember that date, October 25th. Write that down, October 25th. And then next to it, write be ready in all caps and underline that. The week of October 25th, next week, there are literally hundreds of earnings trading opportunities. I like to call that Money Week because there's so many opportunities. And opportunities are the lifeblood of trading. It's having an investor's mentality, right? We are at the beginning of a life-changing time to trade. So when's the best time to be prepared? If Money Week is literally 5 days away, you want to be ready for it, right? When you want to start? Next month? 2 weeks from now? No. The best time to get started is right now. 1, 2, 3, boom, do it. And the most important thing about earnings trades is simply that they work. It wasn't until I was a trader, like most of the traders here attending this webinar, trading in a regular non-professional account, that I discovered the power of time spreads. And ironically, after trading thousands of time spreads on the trading floor and honing my skills with them, mostly in the form of risk management and execution, I learned the last 10% nuance that pushed the power of time spreads over the top for me in a rather unique way. So this is about 6 years ago or so. Long story short, I found myself on the phone with the producer from Bloomberg Television, and he wanted to interview me down in the trading pit. And I was actually pretty excited because this was the first time that I was going to be on global television in front of, you know, hundreds of millions of people. And so I said, well, what would you like to talk about? And he said, simple. Apple has earnings coming out after the close. We would like you to give us a trade idea going into Apple's earnings. And then it was like, put on the brakes, screech the tires. I was like, oh no. And I didn't say that, but I said, let me call you right back. Because what a lot of people don't know is that most professional traders don't trade earnings. They're not allowed to. At the height of my career, I worked for Steve Fossey. He had 50 traders working for him. I was in the top 5 or top 10% of the entire company for making money. And I was allowed to do basically whatever I want, trade as much as I want, as big as I want. If I ran out of money, I'd just get more, but I was never allowed to trade earnings because earnings is the most unpredictable day of the quarter for most stocks. So I'd never done it before. So I went over to my trading station because those of you who know me, you know that I always put my money where my mouth is. If I'm going to talk about a trade in front of 100 million people on TV, it's going to be something I believe in. It's going to be a trade that I have on. So I went to my trading station and I looked and I was like, well, can I buy calls or puts? No, those are directional and nobody can pick direction trading, earnings, not credit spreads, not cash secured puts, not covered calls. What can I do? And then I looked at a time spread and I was like, wait a minute, this sets up amazingly. This is a great trade. I immediately put it on. I went and I did the interview. The trade made money and I was hooked after that. Later, I came across some data that you'll hear about in a minute that then gave me the black and white proof that this was no fluke. When the right criteria are met, this is a genuine consistency trade that can be used over and over again to crank out consistent profits with confidence during specific periods of the year, in particular, earnings season. Really quick crash course, a time spread is when I buy a longer term option and then at the same time as part of one trade, I sell short a shorter term option. Both are calls or both are puts, and both of the options have the same strike. They're just two different expirations. Now the data show that these usually work out great, as you'll see on the next slide, when certain criteria are met. And this is really important. I'm definitely not saying go out and trade a time spread on every earnings play. That'd be a disaster. It would not work. But when certain criteria are met, these work great. The other times when other criteria are met, we use straddles or some other strategy. Straddles are often weak when it comes to earnings because of the implied volatility buildup leading up to earnings. But when we do our yes/no test, we'll show that there are times, less than 5% of the time, when some other strategy besides time spreads work. So mostly, we're going to stick to time spreads. Let's look at why. There's a lot of data here, a lot of numbers. Don't get too hung up on trying to read all the numbers. Later, I'll explain how to simplify all this. For now, here's what's important. If you sell short-term options the day before an earnings event, they lose value greatly once earnings are announced the next session, which is good because you're short those in a time spread. Now, longer-term options also lose their value between putting them on the day before earnings and then after the announcement. But the key element of this observation is that short-term options lose way more value than the longer-term ones. So what that means, and what this essentially proves, is that when certain criteria are met, trading time spreads around an earnings event is effectively a long-run, consistent winning strategy. And you can see the results here. These are basically the steps to follow this system through earnings season. There are a few details involved, but this is basically the gist of it. So write this stuff down. First, we find all stocks that have options listed on them and have earnings coming out after the close today or before the open tomorrow. You with me? Yes, it's important. We can find several trades a day. Sometimes there are hundreds. For example, next week, the week of October 25th. Again, this is an extremely important week next week. We screen those trades using the yes/no screen technique to see if we should continue on with the potential trade. This is your first step and will literally save you hours and hours of your precious time and make your life so much better. Not to mention, it'll ensure you're only trading the best trades, the ones with edge, meaning they have a statistical advantage. So your win rate increases and your winners are bigger. You like this? So we only continue on with trades that have a positive term structure of volatility. And the greater the disparity in the term structure, the better. This step is critical. This is what I did on the trading floor every day and then put it into our earnings trading system to make this simple for anyone to follow. Next, we run the is-was check by modeling the spread on tomorrow's days with the variant vol crush on both the short-term and the long-term option based on a partial reversion to the mean, but also relative to realized volatility. And we compare that to the past to get the modeled endurable gap, okay? The modeled endurable gap is just my way of making this completely foolproof. So then it's simple, it's very, very super easy for you. Once you have that, you'll know exactly which trades to put on and which to stay away from. Now here's where most people go wrong. We put on the time spread the session immediately before earnings. This is less than a 24-hour trade, and that's critical. We follow the MTM proprietary earnings trade technique that I just shared, exit the trade at the precise time the following day. Everyone screws that part up, but I'll share with you how you can get the timing right later. Then it's just rinse, wash, repeat. So this is a trade a trader could have made in a past earnings season. Could have gone through the checklist that I just shared, and it would have triggered this time spread in McDonald's. So a trader would have bought to open 10 of the McDonald's 4-day 165 calls at $1.75, and at the same time, as part of one trade, bought to open 10 of the McDonald's 11-day to expiration 165 calls at $2.11. So this is one trade, a time spread. Paid $2.11, collected $1.75, paid a net of 36 cents. So that earnings comes out. Next morning, we get in the market, we wait for 3 things to happen. And once they do, we can take off the trade. And so when they did, a trader could have closed this trade by buying the one you're short and selling the one you were long. So you could have bought to close 10 of the now 3-day 165 calls at $1.29 and sold to close 10 of the now 10 days, right? Yesterday was 11 days, now it's 10 days, 165 calls at $1.81, taking in a net of 52 cents. So the trade made 16 cents on a 36-cent trade. That's 44%. Let's make this more tangible. If you bought a 10 lot, you'd have invested $360 and made $160. Factor in commissions, of course, and this is a solid trade. Now notice, and this is important, I wanted to make this as black and white as possible. So I assume buying the offer and selling the bid for presentation purposes. But in reality, because the bid-ask spreads were so wide, particularly on closing the trade, which is almost always the case, if I'd have used our technique of middling the market, the profit would have been a bare minimum of 20 cents better, which is $200 more on the 10 lot, or more like 100% return in this case. But again, I just wanted to show this in a pure, unarguable way. In reality, managing the bid-ask spread on closing the trade is where most people go wrong. People leave thousands of dollars on the table every earnings season by not doing this part right. The results I showed that are sort of the worst case scenario for this particular trade, they're good, but they can be great. Now I want to make this very realistic and show you how this works in real life when you middle the market with the MTM 2520 middling technique. These are some screenshots of my account on an earnings trade I made in a past season. This is Oxy. So I went through the list of steps that I shared earlier. It triggered this time spread. I bought to open 20 of the February 19th 66 calls at $1.49. And at the same time, part of one trade, sold short 20 of the February 15th 66 calls at $1.31. Paid 18 cents. But look, the ones I had to buy, the February 22nd 66 calls, they were offered at $1.50. I didn't pay $1.50. I paid $1.49 less. And the ones I had to sell were bid at $1.30, but I didn't sell them at $1.30. I sold them at $1.31, smack dab between the bid and the offer. I should have paid 150 minus 1, should have paid 20 cents, but I paid 10% less. I started the trade 10% better than a lot of traders. So earnings comes out the next morning. What do I have to wait for? The 3 things to line up. And once they did, I put in my order to sell at 30 cents and I got filled. But I only got filled on 2 of them. So did I panic? No. I just simply, look, I follow the system. It's a system, I follow it. I stepped down to 27 cents, got filled on the balance, and it ended up being a 51.7% profit in one day. It's about $279 in money terms, minus commissions. So 51.7%, what was the other one? 44% good, solid trades. We want to make a lot of trades like this, right? Do they all work out so perfectly like this? No. There's going to be some where you lose money, and this is one that I traded where I did lose money. This is an MGM. I went through my steps and it did meet the criteria and it did trigger this trade. So I bought 30 of the March 1st 29 puts at 91 cents, sold 30 of the February 15th 29 puts at 71 cents, paid 20 cents for it. Earnings comes out and they were way out of line. Like exactly what I didn't want to have happen happened. The stock really got away from me when the market opened. Did I panic? No, because it's a system. I waited for the three things to line up, and then I was able to close the trade, and I got out at 19 cents, which is just a 5% loss in one day. And I can go on and on. I've made hundreds and hundreds of these trades. This is Las Vegas Sands, bought to open 15 of the May 3rd 68 calls at $1.76. Sold 15 of the April 18 68 calls at $1.26, paid 50 cents. Earnings came out. Next morning, the market opens. I wait for the three things to happen. And when it does, put in my order to sell, and I got filled at 70 cents. That's a 40% profit in one day. It comes out to $300 minus commissions. And the key here is consistency, driving consistent profits. If you can make $300 on one trade, $500 on another, $280 on another, $700 on another, and there are hundreds of opportunities in a week, how much money can you make in just one single week using this strategy? What do you think? Let's take a survey. How much do you think that, like next week where there's literally hundreds of opportunities to analyze, how much do you think you can make trading this strategy just next week? Hit the questions box for me. I'd love to see what your thoughts are. Hit that questions box. Michelle says $5,000. Okay. Mike says $7,000. George says $2,500. Roger says depends on your account size. Right. I was doing this with, in these examples, investing hundreds of dollars and making hundreds of dollars. What if you have a really big account? Could be a lot more, right? CP says $10,000. Sure. That's why a consistent system is so powerful. And that's why management's so important. Makes sense? Management makes money. It's the 3 M's of trading. If you can follow a checklist, finding, analyzing, setting up, and making the trade is simple. And closing the trade is simple too. We simply take it off the next day, but it requires a little nuance. And I'll share a resource to make those nuances super simple in just a moment. This is a system, and that's why this is easy. Work the system, and the system works. Let's talk about realistic expectations. You create your own reality, right? You take the steps that make things happy to make your life what it is, right? Am I right? Do you believe that's true? Do you believe that the actions you choose today determine your future? And if you don't take action, if you do nothing, nothing changes, right? Profitable trading is a reality for many traders. We have traders in our online community chat room who are some of our top money-making students. They're really successful, regular folks just like you and me who post their trades real time for all to see, who have made the decision to be profitable, to simply do it, to make that choice. And by the way, in a moment, I'll reveal how you can get free access to the MTM community chat room for 6 months. How often can I find trades like these? All throughout earnings season. Next week, there are hundreds just next week to analyze. Are these returns common? Yeah, I literally showed you screenshots of my account. Earnings trades can yield highly leveraged returns with low risk. What if the trade doesn't work out? I told you, some of them are not going to work out, but the risk is limited. But more importantly, manageable and can be a small fraction of possible gains. Here's how to make this work. This is a simple process anyone can follow, and the timing is urgent because earnings season already started. You can make the next 6 months your best months and finally make your trading easy. This is the Total Earnings Domination All Access premium package. Let me share this with you. Here's just some of what you'll learn. How to easily scan the market for earnings trades. Where to get real-time data that pinpoint winning earnings trades. Best time of day for entries and exits. The yes-no screen blueprint technique. The earnings time thread risk checklist to maximize your gains, minimize your losses. Calculating the is-was gaps, model and durable gaps. How to manage the wide bid-ask spreads on closing the trade. So you now have a new opportunity to trade consistently using this strategy that works in all market conditions. To get a blueprint for trading earnings and watch live setups of earnings trades so you can easily follow along. To make the next few weeks your top performing weeks yet. And if things were tough, to maybe make back losses on trades that you already made. So let me first talk about who I'm not talking to, who this is not for. This is not for people looking for a get-rich-quick scheme. It's not for gamblers. Yeah, it's possible to make a lot of money in a short period of time, but I want to be clear, this is not gambling. This is not guessing. I've done the math. You just follow along. You trade with a mathematical advantage like a professional trader. And it's completely simplified so anyone can do it. It's also not for people who'd rather spend time and money and endure losses to learn on their own over many years' time. Who has time like that? That doesn't make any sense, right? It's also not for wishy-washy procrastinators. Wishy-washy people don't make good traders. But I know that's not you because you're here. You've invested in yourself today just by showing up. You took the first step. Time is more valuable than money, and you have invested your time. Let's talk about who this is for. This is for you if you want more consistency. This is for you if you want low-risk trades with high profit potential. This is for you if you believe your success is tied to following a methodology. This is for you if you can follow a few simple steps. This is for action takers, and for my action takers, I am going to make this really easy for you. This is our Total Earnings Domination 6-month all-access premium package. First of all, let me share with you what you're going to get with this class. You begin with the brain dump part of the training, the Secrets to Trading Earnings Boot Camp video. I'm going to put 28 years of my experience into your head with one short video. This is the keys to the kingdom. That's a $2,995 value. Why is it $2,995? Because if you can make the kind of money we're talking about consistently on daily trades throughout this earnings season and for the rest of earnings seasons this year and forever, this small one-time investment can pay you over and over again for a lifetime. And as you can see, there is no auto renewal. But isn't it important to make sure you can put that knowledge to use, that you can actually do it? Today, you're going to get hands-on training. Starting October 25th, you'll log in and watch me trade live in a real money account. So you'll see exactly what to do as you follow along with me. You'll literally see the system being traded in the live market, and you'll make your first trade together with me as a group. This is the ultimate hands-on training. And we want you to literally have this mastered. So you're also getting our 4-part on-demand video masterclass, Earnings Trading Techniques from 2 decades on the CBOE trading floor. You'll know exactly what to do every time. This puts the power into your hands. You'll have questions. So today you're also getting 6 months of the MTM community chat room. You'll log in and get all your questions answered by me or our other coaches. But another huge sort of secret benefit that I shared with you earlier is that the MTM community chat room is where all our top money-making traders log in and post their trades live real time. This is an all-access premium package valued at $7,437. But I want to make this completely irresistible so you can confidently, immediately join us right now. A 1,000,000-mile journey begins with the first step. A 1,000,000-mile journey begins with the first step. And this is that step. Go right now to markettaker.com/TED and get all this for one small, easy investment of just $497. 1, 2, 3, boom. That's a massive 93% off discount. This is valid for the first 40 of you who take action right now. And why would I give such a huge discount? Because earnings season is starting right now. It's already started. I want you to be one of the 1,000 trader success stories we strive to create this year. People who take action are the ones who can be great traders. When you see a great opportunity and you fearlessly act on it, that's who we're looking for. So to reward the traders who will move forward, this 93% off is valid only for the first 40 people to join right now by going to markettaker.com/TED. That's market like stock market, taker like take what is rightfully yours, 2 T's in a row, markettaker.com/TED. Here is a special extra bonus not on that last slide. I want to make sure that this works for everyone, regardless of your experience level as an options trader. Even if you're brand new to options and never made an options trade yet. To make sure this works for everyone, today you're going to get the Options Impact Quick Start video course. This on-demand course levels the playing field for beginner option traders. It covers all the basics you need to begin trading options confidently. Even if you've never traded an option before, you'll be able to start trading like someone who's traded successfully for years. It'll put you on the fast track to maximize your gains this earnings season. And here is our big one, and not everyone's going to get this one. Action takers only. You are going to get this course that every one of our top traders has gone through. We're going to share live weekly drill down master sessions together. This is the MTM Trade Smart Workshop online education series. This is where I pull back the curtain. Each month we pick a different topic to drill down on and give you expert understanding of it, so you can achieve mastery as an options trader. I can't open this bonus up to 40 people. I just can't. I can only invite a handful of traders so I can manage this process with you. I take this really personally. You've invested in your success today, and taking the next step, you're going to invest even further. So I am also. I want to have quality control. So it's essential that I keep this bonus class very small. Every week, this inner circle group gathers online. The next webinar happens later today, as a matter of fact. Oh, no, it's tomorrow. The next webinar happens tomorrow. That special session continues the Mastering Time Spreads series, which is at the heart of the total earnings domination system. For your convenience, these are all recorded. With your password access, today you'll instantly get access to the Mastering Time Spread series that has already been recorded, the Trading Option Greeks series, which is at the heart of the total earnings domination system, profit driving volatility strategies, which is also important, mastering vertical spreads to get cross training, and more. This is a $1,794 value. I am opening this bonus up only to the first 17 traders who take action right now. This is the fast action bonus, and this is to reward those of you who are decisive, who have the aptitude to be great traders because you see value and you act on it. This is value for the first 17 of you. Look, This earnings cycle is one of the most important in the entire history of the stock market. Analysts are waiting to see what the earnings are to give guidance for the future. And that means traders can make more money than they ever have before. This process is starting right now. When you enroll today, you will have just enough time to get through the brain dump training of watching the boot camp and the 4-part master class so that you'll be ready for the first live class on Monday, October 25th. These are the 5 most important classes that you will attend this year, probably this decade. This earnings season is the opportunity of a lifetime for those who choose to put that opportunity into action. So it's go time. For those of you who have been waiting for the right opportunity, this is the opportunity to change your life. And not only do you get these 5 classes in October next week, but only with this 6-month all access premium package do you get access to everything for 6 months. So you also get the 5 live earnings setup classes in January as well. These 5 hands-on training sessions are all 100% totally live. If you can't make it, they're all recorded. In each of those classes, I'll reveal the top earnings trades of the day. I'm going to prove that anyone can do this regardless of experience or account size. So here's my guarantee to you. I'm actually trading these trades live with real money so you can actually see exactly how it's done and follow along. In fact, I'm using less than $10,000 in my account to show that anyone can do it regardless of account size. Let's go to markettaker.com/TED. Meet Jill from Cincinnati, Ohio. She joined our class a couple quarters ago. One of the first trades she did together with us in the live coaching sessions. She bought a Microsoft time spread that met our criteria, as did I and other students in the class. She bought the spread at $2.65 and in less than 24 hours, sold it for $3.75, locking in a 41.5% profit. And she posted real time in the MTM community chat room, which you will have the same access to. The MTM community chat room is where all our top money making traders log in and post their trades live real time. If all you got out of the total earnings domination premium package today was to watch some of our top 6-figure traders posting their trades real time so you could follow along, wouldn't it be worth it just for that? David Z from South Lake Tahoe says closed the last 5 at $1.41, total gain $425 less commissions. The class has paid for itself, and that was during Money Week that quarter in the first 5 days. Russell K from Glendale, California says I'm above an 80% win rate. Most of the others were maybe a 5% loss. Only 1 total loss out of 16 trades. Like you said, middling is really important and waiting for the bid ask to normalize. Just waiting that hour made a few of the trades winners instead of losers. What Russell's referencing is I'm in the chat room all day long during Money Week. I show you how to put it on during the live classes, and I'm in the chat room saying, okay, we have to wait for these 3 things to line up. One of them is the bid ask spread normalizing. That one didn't line up. I told Russell I wasn't getting out yet. He waited, and it literally turned a losing trade into a winner just to wait. Tyler M from Lexington, Tennessee says I took Dan's MTM course about 7 years ago in college. It was my first exposure to a structured options trading strategy. He started me down the path that I'm on today. Now I'm a professional options trader at a fund. For you to get results like Tyler, like Russell, like David, like Jill, you have to do what they did right now and go to markettaker.com/TED. Again, this is limited to the first 50 people, and I can see we've had a good number of folks join us. Welcome, George from Dallas, Texas. Congratulations, George. Great job. Welcome, Mike from Savannah, Georgia. Congratulations, Mike. Great job stepping up and investing in yourself today. You're making the most out of this presentation. I love that. Welcome and congratulations, Stephen from Fremont, California. Great job, my friend. I love it. Good job. Welcome and congratulations to Michelle from Chicago, Illinois. That's our hometown here. Congratulations, Michelle. Great job stepping up and investing in yourself. There's a number of other folks who joined us as well. I'm going to read your names in just a second. But first, I just want to get to some frequently asked questions. And by the way, if you have a question so that you can make the decision to join us today, also go to the questions box and put that question in there. In the meantime, here are a few frequent questions that I get. Is this live or recorded? Both. I know you're busy. Not everyone can make it to the live classes. So those of you who just joined, you got a username and password in your email. If you don't see it, check your spam folder. It's there. How long do I have access to the class? Only with the 6-month premium package do you have access for 6 full months. You will have plenty of time to master the system. Is this time consuming? No, that's the whole point of all this. In fact, it'll save you time so you can spend it doing the things you love with friends and family. You can spend years trying to figure it out on your own, but right now is the hottest earnings season you're likely to see in your lifetime. You'll be able to go through this simple course now and start seeing immediate results. How do I know I'll be able to do it? I literally showed you screenshots of my account. This comes with that hands-on training where I'll show you live in the markets exactly what to do with real money live trade setups. But the number one question we get is there a limit on the number of students who can join? Yes. We have to limit the number allowed in the live component of this package, or else it gets out of hand with questions. I want to give each of you my full attention, so we have to limit the number we let in. I have a small team committed to student success. If you're committed to doing your part, we will do ours. And therefore, today is limited to the first 40 people who are serious about max gains during earnings season. You'll have to go to markettaker.com/TED. Now, I've been talking for about 70 minutes. I'm going to take a quick drink of water, and I'm going to check with my team, and I'm going to see how many of these the big one bonuses, the Trade Smart Workshop bonuses are left, and I'm going to let you know. So I'm going to pause this for just literally 10 seconds. All right, we're back, and it looks like there are 4 spots left for the fast action bonus. You guys are fast, and you're the guys and gals that I want to attract to this. The people who aren't afraid to make a trade. If investing $497 in yourself is scary, this might not be the right program for you, right? But if you recognize value and you want to invest so that you can profit, this can be an excellent course for you. But in order to make this happen, it's essential that you join right now, because the first live class is Monday, October 25th. And if you don't get through the bootcamp video and the master class by then, you won't be ready. So it's crunch time. If you're ready to make it happen for yourself, go to markettaker.com/TED. Now I'm going to see if there's any final questions, and if there's not, I'm going to turn it over to Sherry. Do we have any final questions to help you make the decision to join us today and invest in yourself? Do we have any final questions before I turn this back over to Sherry? How many bonus spots? How many bonus spots are there? We've literally got 1 of the big one bonus spots. Okay, of the 17, 6 are filled already. So please go to markettaker.com TED right now and be the last person to grab that Trade Smart Workshop bonus. Rob says, what's the price after the 6 months to the program? Well, there's no auto renewal. So you don't have to pay anything after the 6 months. If you do choose, there's actually kind of like a secret bonus. And if you signed up, I didn't know if you signed up yet, Rob, or not. I hope you do. But for those of you who signed up, you might have seen the secret bonus that I don't even think I'm supposed to mention, but it offers you another 6 months for like an ultra super discount on that. And a number of folks do that. You don't have to, but if you decide later, we'll make you a super sweet deal. But there is no auto renewal. You do not have to stay in this class after. Make sense? Does that help you feel comfortable and confident to join us, Rob? Yeah, awesome, good, man. Well, grab that last spot. I think it's still open. Grab that last bonus spot because that Trade Smart Workshop you are definitely going to want to be part of. All right. So yeah, just go ahead in and let's see here. Oh, Sherry put that link in the chat box. Thank you, Sherry. I appreciate that. So all you really need to do is click on
Of
Market
course.
Thanks. All you need to do is click on marketfigure.com/TED. Rob, I'll keep an eye out for your sign up. And everyone else, thank you so much for joining us. Welcome to all our new subscribers. I'm going to leave that page open for just a little bit here so Rob and whoever else joins us today has time to fill out that form. Thank you so much. I'm going to turn this back over to Sherry. Trade smart, and we will see you next week in the live sessions.
Awesome.
Bye.
Awesome. Thank you so much, Dan. That was awesome. Everybody, I did put the link in the chat, and you should definitely take a look at that and get in while you can at that kind of pricing. That's amazing. Really, really amazing. And I know for a fact that Dan over delivers. So take advantage of that. I want to thank all of our presenters for joining us today. I really, really appreciate Melissa stepping up to a new time slot and for Simon joining us at a moment's notice because we had someone, Nick had to cancel due to a family member having passed away unexpectedly. And we send him our sincere condolences. Thank you all for attending. This is your host, Sherry, and I'm saying to you, trade well. Goodbye.